Yeah, sorry?
So NII is below estimate.
Below estimate. And net profit number is, net NPA is at 0.39 as against estimate of 0.35. So slightly higher compared to what the street was anticipating on this front. But we'll have to still wait for the NIM number to come in, which we are still awaiting.
NIM, loan book growth number, NIM number and QOQ NII numbers are very important. So I think we should wait for that.
Right. We are still, okay, the stock is down nearly 4% on the back of the sharp miss that we are seeing on the NII front that has come in. Now, NIM number is still awaiting on the street, but apart from that, what I can pick up here is that the provisions that have increased, that have come down actually, that could also be one of the reasons why the street is not quite happy. On a Q-on-Q basis, provisions have come down to 2,870 crore from 4,506. Parag bhai, do you think this could be one of the concern that the street is having, that the company, that SBI has not provisioned for any impact that could come in from the Middle East?
No, I don't think so. I don't think so. Mainly it is, the key thing is NII, QOQ NII growth. Of course, asset quality this quarter has to be good. As per expectation, I'm saying the expectation itself was good. So asset quality, there should be no issue. The only thing is loan book growth and mainly NIM. Because NIM expected was flat QOQ, which is 3%.
Right. Let's get in Piyush to understand what's he picking up on SBI. Piyush, any clue on what is the net interest margin that has come in here?
Of course, we will have to wait for the NIM number, which actually comes out with the IP. But what we can see is that bank has been able to post above estimate net profit. Its Q4 FY26 net profit stands at around 19,684 crore. The net interest income also is slightly above estimate. It's at around the NI is at around 44,380 crore. The bank has seen a jump in its other income as well. However, the provision, the main net profit actually seems to be boosted by a lower provision if we see YOY and Q1Q both. In terms of asset quality, the headline figures, which is the gross and net NPA ratio, it has actually risen a few basis points. But overall, a stable set of numbers. We need to see overall deposit growth and loan growth. In the provisional figure that had come out, it was up over 14% odd year on year. So a stable quarter for SBI in Q4. We are waiting for the management comments in the upcoming press conference. Back to you.
Right, that's all we are getting right now on the SBI numbers. Two big numbers that have come in the last 10 minutes, SBI and Titan. Titan has perked up in trade from 4,240. It is now trading at 4,000, a good 100 rupees up move that we are seeing when it comes to Titan, while SBI is down sharply in trade, down around 4%. If we have Mahima, we can get in more details on Titan at this moment till we gather more details on SBI. SBI is now down 4.5% in trade, post missing the guidance on NIF compared to what the street was anticipating on the net interest income front. Do we have Mahima here? Let's get in Mahima with more details on Titan first.
Yes, so Somit, we have the segment-wise performance as well. Jewelry business has seen a growth of 50% over where it was in Q4 FY25 at the 18,195 crore. India business has seen a growth of 46 odd percent. Tanishq Mia as well as Zoya combined has seen a growth of 48 odd percent. CaratLane has recorded a growth of 22%, which is lower than what it has done earlier, but still a very healthy growth. International jewelry business has seen a growth of 174%. The early Q4 business update was indicating a growth of 156%, but it's come better as compared to that. In terms of the watches business, watches has delivered a steady quarter. Analog watches have continued to see overall growth for the division. We've seen a double-digit consumer sales growth supported by good volume uptick is what they're seeing. Overall, in terms of growth, in terms of percentage, stands at 8 odd percent for the watches segment. For eye care, the overall domestic business has seen a double-digit growth in terms of that momentum, and overall segment has seen a growth of 17% when it comes to the top line. For emerging business, all the skin, earth, etc. have done, all these brands have done fairly well, and overall the business as a whole has seen a growth of 20% this quarter. In terms of the commentary coming in from Ajoy Chawla, who's the CEO of Titan, they've said that FY26 has been a landmark year. They've crossed 50,000 crore crores as annual revenue as milestone. The quarter performance was led by Festival of Demand. So basically what we've seen is that studded in the commentary is reflecting that studded has also picked up from here on, because Q4 business update was indicating that there is buyer growth coming in for studded as well, and that's what is indicated in the commentary as well. FY27, they're saying that optimism is back on exceptional FY26. So they're saying that even on a higher base of FY26, they're going to do fare well in FY27, but they'll be watching out for the geopolitical scenario, considering Middle East. They have exposure there. Recent acquisition of Damas is also one of the major things that we'll be watching out for going forward where Middle East conflict is concerned. So this is the overall view of how things have fared for Titan Well. The stock is now at its day's high point as we speak, up 2%.
Right. Mr. Chokhalingam, did you get time to look at the SBI number? The stock is down nearly 5% in trade. What could be the major disappointment here? The NII number coming below estimates, or the bank not doing any provisions for Middle East war?
No. Actually, on asset quality, there is no concern. I saw the number. They reduced the provisions, but it should be worth noting that the net NPA, they have not compromised. It is same 0.39% like December quarter. On year-on-year basis, it is down. And even if you look at outstanding net NPA in absolute term, it has come down. So they have not compromised on the asset quality, though they cut down the provisions. And point two, the business numbers are good. Advances have grown about 17%, which is very difficult for a leader like SBI to beat the industry. That also one should give credit. But what went wrong is basically the treasury segment. The bond yield rise must have affected SBI very badly. So year-on-year basis, the segment results from the treasury operations is down very badly. That is what pulled down the SBI performance. But I am sure, this is very temporary, because we know as and when the oil price crashes and, the inflation moderates, and therefore yield moderates, SBI will come back. It's a very attractive stock. I would say that it's a good opportunity for buying the stock for medium to long term.
For that view. Well, let's also invite Gaurang Shah, Senior Vice President at Geojit Investments. Gaurang, welcome at NDTV Profit. How are you viewing SBI results? What would you advise to investors?
So, thank you so much for having me on the show. Good afternoon to all your viewers and to all of you. All standard disclaimers in place according to SEBI regulations. We do have a positive coverage on State Bank of India from a long-term point of view. That's again a disclosure. And as Mr. Chokhalingam was mentioning, even I feel this is a knee-jerk reaction to the numbers. I don't think there is systematically something wrong in the numbers. I'm sure one-off numbers cannot be a reason for your long-term investments to make any changes as far as SBI is concerned. So we do have positive coverage and we are recommending him.
Right, Gaurang. Thank you for joining us and giving us your first cut on SBI. Thank you, Mr. Chokhalingam, also joining us and giving us your perspectives on the stocks that we discussed today on the show. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth. And
hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima. It's been an earnings season-led show, the last one to say the least. Two big earnings in just a 10-minute gap.
Not even 10 minutes,
and
I
just
think.
a frenzy in that sense happening in the newsroom per se. But Mahima, of course, tracking Titan. The stock is up 5% up right now. And you've seen, of course, margins being a key aspect that we discussed just at the end of the last show. SBI is the other one, stocks tanking in trade today as well, and completely a different reaction as to what we are seeing on both these stocks right now. So crucial time right now for the Nifty 50 companies, and that is the setup that we're going with in Ask Profit right now as well. And we'll of course get you all your stock related queries answered as well. But we've discussed the markets quite a bit, so let's get into the stock related queries as well very quickly and welcome in our guest for the show as well, and probably start taking all your stock related queries. Ruchit Jain, Vice President Equity Technical Research at Wealth Management Services at Motilal Oswal, joining in on the technical. Neerav Asher, Head Equity Research Analyst at Latin Manila Securities, joining in on the fundamentals. Gentlemen, both of you, thanks so much for joining in. Let me go across and just take the first stock related query. This is from Shankar from Bangalore, and his question being on Tata Capital. He's owning 660 shares at 331, and Neerav, he wants to add another 300 odd shares more. What would you recommend on this counter?
Well, it's advisable to add at the current levels if you have a horizon of at least a couple of years.
So that's the view coming in on Tata Capital. The next one that we have is from Satyan, who's asking about CCL products. He's bought at the levels of 1080 with a short-term target of 1250 in his mind. He's saying today it's touched 1200, if that's correct. It's trading around around that 1129 range. Wants to know whether he should hold or book profits now and switch to something like a trend from a short-term perspective. Ruchit, a very good afternoon to you. Your view?
Yeah, hi, very good afternoon. I'll recommend to switch to some other stock. Today we have seen a volume-based pullback move in the stock, and generally when we see such high volumes during price corrections, that stocks can see some relative underperformance in the near term. So if we have long positions, then and in profit, then I would recommend to book profits over here.
Got it. Well, let's go across and take the next question now from Mohit, and his question is is there a good time to purchase Motherson or Motherson Sumi, of course, the bigger parent, or Bank of Maharashtra for the long term? Neerav, either of those counters that you like right now?
I think he should go in for both these stocks, because both of them are looking quite attractive. We are seeing a good rally in auto ancillary space, and the prospects are really improving. And Bank of Maharashtra has also shown very good potential, very good numbers. So if possible, he should try to add both.
Well, that's the recommendation coming in from Neerav on both of those counters, Motherson as well as on Bank of Maharashtra. Next one's from V. Murli, and it's a smaller counter that he wants a view on. Hawkins Cooker, bought at 7412. He's holding 75 shares and asking for a 12 to 15 month view. Neerav, we've actually seen the growth quite slowing down in this space. Would you rather recommend him to look at some other consumer staple or a discretionary play at this point of time?
Well, I think this is a kind of a portfolio stock, and I think he should hold on to the stock because sooner or later you are definitely going to see recovery. The competitive intensity is high in this space, but the advice is still to hold the stock.
Got it. Well, before we start taking all your other stock-related queries, a very important update now onto an exclusive as well. Cloud hangs over the proposed Dixon Vivo joint venture as well. And let's get in my colleague Rishabh to tell us more as well as what he's gathering right now on this. Rishabh, over to you.
Absolutely. So what we're picking up is that the approval, the proposal for a joint venture between Vivo and Dixon Technologies here in India. Vivo is, of course, a Chinese company. The proposal for them to together establish a joint venture to manufacture smartphones, that is still under active review. There's still a lot of shadow over that proposal that is still pending approval by the government. What we're picking up from top government sources is the fact that the Home Ministry will take a final call on this. The entire fiasco is around the fact that Vivo has been and is under the scanner of the Enforcement Directorate, the ED, for a bunch of charges under the Prevention of Money Laundering Act. They have been accused of various about allegedly illegally transferring roughly 62,000 crore rupees to China, and that is to avoid taxes. So that is what is casting a shadow over the entire joint venture process. A little context on what this JV is. This was initially envisioned way back in December 2024. So a lot of time has passed and an approval still hasn't come. And this is, of course, due to the shadow that has been cast over the ED probe into Vivo. This JV was, of course, meant to manufacture a lot of smartphones, a lot of electronics, consumer electronics here in India. Would have been a big boost for Dixon, given the fact that Vivo is a major sort of manufacturer of mobile phones that are being used in India as well. So that's what we're picking up from top government sources. What we're seeing is that this scrutiny by ED may impact the entire approval process, and the government is yet to clear. There's no final call that has been taken on it. It is still under active review, but what we're reporting on is the fact that there is some sort of a shadow over it because of the ED probe into Vivo.
Well, thanks so much for that, Rishabh, getting us that key update. And as Rishabh rightly mentioned, since 15 December 2024 is when that approval or when that exchange announcement was made by Dixon. And a lot of the guidance for FY27, almost 10 million units is what's expected from this Vivo JV itself. So the management of Dixon had told us after Q3 earnings that it will roughly take even 45 to 60 days once that approval comes in to ramp up this particular joint venture. So could be a difficult time in terms of results as well as what could be expected if a potential guidance cut on Dixon. But the stock's now down 2.5% as we speak and break this important update almost 17 months after their exchange filing on this joint venture between Dixon and Vivo. Cloud's still hanging on, as our colleague Rishabh highlighted as well. But Nirav, let me just take a very quick question with you also on Dixon, because a lot of that guidance also has some numbers from Vivo as well. If it doesn't come, what would be your view on the stock?
Well, I think these EMS firms which are listed, basically the markets have assigned them very handsome kind of valuations, and that is on the basis of the prospects. At least for the next 2 to 3 years, we have been seeing very strong prospects. And there's little room for error, but as we always say that there are a lot of twists and turns in the journey, and this back and forth which has been happening with respect to the Vivo deal is definitely going to be an overhang as far as the stock is concerned. So I think we should see some kind of a meaningful correction in the stock going forward.
That SBI NIM numbers are flashing there. 2.8% is where it's coming at. The expectation was of around 3.2%. So I think it's the internals that have played out badly for the counter, and now we're seeing almost a 6% downtick on SBI. So that was a number that we were waiting for eagerly. Domestic loan growth at 16% as well. But I think the NIMs is the number that we were closely watching, and that's come in below expectations, and that's why the further downtick in the stock is what we are seeing for SBI. But moving on to the next query that we have.
Actually, we have a query on SBI as well,
okay.
And let me just take it quickly with Nirav. Nirav, because Gauri Shankar has, is watching The earnings holding shares at 623 since 2024. So gotten at a very interesting level and holding 150 shares. Now, Nirav, I know it's a very fresh number and we'll of course get more commentary coming in post the press conference, the conference call as well. But just in terms of the basic numbers, if you've had a look, what would you recommend on the numbers? And for Gauri, should she just hold on, wait for more clarity?
Yeah, it's advisable to wait for more clarity on this because I think the performance of the banking sector is very, very crucial going ahead. And we've not had very great numbers as far as the leading private sector bankers or the public sector banks are concerned. So the ideal course of action will be to wait and watch and see the management commentary and then probably add a few more shares at lower levels.
Even provision and slippages both not looking nice, both have risen. So I think all of those factors adding together and putting pressure on the SBI stock now down 6.4% as we speak. But time for a rapid fire round. Let's try to take as many questions as possible. The first one that we have is on RBL Bank. Vijay from Chennai wants to know as to what should be the short-term target on this one. Ruchit, your view?
On the high side, we can expect targets around 365 and support is at 330.
Umesh has ITC at 320. Should he continue to hold for the long term, Nirav?
Yes.
Okay, the next one that we have is coming in on ITC. Umesh, we already took that. The next one that we have is from Jigar, who's asking about Canara Bank. He wants to know whether he can continue to hold this from a long-term perspective or not. Nirav?
Hold.
SMS Pharma, our viewer is holding shares at 350. Ruchit, should he continue to do so?
Let's continue to hold with couple below 390.
Okay, the next one that we have is on Hudco. Yamini from Chennai wants to know if she can buy at the current levels from a one-year perspective. Ruchit?
Keep a buy on dip approach. Declines towards 210 should be bought.
Narayana Rao is holding Sagility at 41.6 and 2,000 shares at that. Nirav, he wants to add a few more shares, but what would you recommend?
Do not add.
Okay, Pace Digitech from a long-term perspective, is it a good buy for the next 2 years? Any idea on this, Nirav?
Yes.
Marksans Pharma bought at 198. Ruchit, he's holding 125 shares. What's the view for the next 6 months?
View is positive, so hold.
Good time to enter Vedanta from a long-term perspective, Nirav?
Yes.
Netweb Tech at 3972. Ruchit, should he get out of this counter now?
Continue to hold.
Central Bank, a good time to invest. Radhakrishnan is asking this question. Ruchit, your view on the charts?
Avoid.
Jeet from Kolkata has a question on MV Photovoltaic. He's holding 100 shares at 262. Nirav, do you have a view on the stock?
Yes, he should continue to hold.
LG Electronics or PG Electroplast? Which one would you choose from a long-term perspective? Nirav?
LG Electronics.
Tips Films bought at 460, 130 shares. And our viewers asking Ruchit what he should do with this counter.
Should exit and move to some other stock.
Questcorp bought at the price of 200. 3 months time period. What's the outlook on the charts? Ruchit?
Should hold with couple below 200.
The next question coming in is on Kala Mandir, holding 100 shares at 165, and this is Mahesh. Should he continue to hold here, Nirav?
Exit.
HDFC Bank on the charts, how is it faring, Ruchit?
Can buy for mid to long term.
Okay.
Good.
All right, okay. So that's, of course, the last question on this round of Rapid Fire as well as Ask Profit. Nirav as well as Ruchit, thank you so much for taking out the time and helping us answer all those stock-related questions. But fintech leader Kissht has made a strong market debut today. The stock listed on BSE at 191 per share, marking 11.7% premium to its issue price of 171. To discuss the company's future growth outlook and strategic plans, my colleague Nimit caught up with the CEO and co-founder Ranveer Singh. Let's take a look at what he had to say.
Wanted to understand what drove you in the sort of environment that we're in today. A lot of companies are pressing pause on their plans to IPO. A lot of them are maybe shelving plans. A lot of them are pushing it back. What gave you the confidence to still go to market today?
I think three things. First and foremost, there is a reality which exists in the market. which of course I'm not an expert on. They go through ups and downs. So that was definitely a consideration. And as much as things have been bad, we also see some kind of buoyancy. But more importantly, the reason we are going there is because there's a confidence and conviction in what we have built. And that confidence, the confidence is not only coming more intrinsically, but we have a large support from the institutional investors. You must have seen the anchor book, which has almost all the prominent mutual fund FIIs who have participated, and that was the true support and the confidence which made us to go despite the market not being so great.
Absolutely. What was the process like in this environment, if I may ask you a little more? When we talk about a lot of companies are bringing down their valuations, there are also companies that are sort of, back and forth with investors on what is the issue size.
Sure.
How when you build a 900 crore plus of total offer, what do you look at there, and how has that process been for you?
Oh, absolutely. Very relevant question, particularly in this context. So the way the process has worked is as follows. As far as the valuation goes, it's a discovery which you do while talking to the investors. Of course, depending upon the market, things can be very different on the valuation side. But what is more important is not only a valuation, but the support that you get from some of the marquee investors. And we would like to believe, as I mentioned, some of the very, very diversified set of investors who have come in and contributed. That's one. As far as, sorry, what was your other question linked to that?
Essentially, I was asking about what your process has been like with the regulatory process, as well as with your investors in building this sort of issue size in an environment like this, a follow-up to the last one.
So when it comes to the issue size, it's a function of, there are some SEBI guidelines in terms of how much you can scale up, how much you can scale down. Mostly the decision for scale up and scale down can be driven by many things, but for us, historically, if you look at our performance, whatever we were anticipating, we ended up doing more.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Mahima Vachrajani, and we'll take you through the next 1 hour of trade. It is a downtick for the Nifty 50, and we're trading with cuts of 0.7%, and we've broken below the 24,200 mark. The question is, do we hold 24,000? Because a couple of big moves, one on either end of the spectrum,
In just 5 minutes.
just over the last half an hour or so, and that pans out right now.
Yeah.
I wonder if the broader markets have also given up ground, and I think that is the case if the advanced decline is anything to go by. The mid-cap index now trading with cuts of about 0.1%, but the small cap index is where the resilience is. It continues to trade with gains of about 0.2%. Quickly just pull up the advanced decline ratio as well, and we'll jump straight into then the heat map for the Nifty 50, and then we'll get into a couple of stocks, and you'll know what we're talking about just by looking at the screen. Pull up the Nifty 50 heat map, because right on top of the screen you will see Titan There you go. And right where Mahima is standing is probably
SBI,
covering
almost
it. State
7%.
Bank of India, which is down about 7%. You know what? Let's talk about the good things first. And let's talk about Titan. You've been tracking it. What stands out?
So I think this quarter, we were expecting a strong quarter, first of all, right? But on top of that, we've seen a huge beat where revenue is concerned. So first, big takeaway is a huge beat in terms of revenue.
Pull up the intraday chart for Titan.
Yes, the intraday, that will show the jump actually for Titan. The second big thing is that they've seen buyer growth this quarter, and that has led to a good jump of 50% in the jewelry business. CaratLane, the business was slightly below the expectation of what it has done earlier at that 22% mark, but still overall jewelry growth has been very strong at 50%. So I think that is one of the reasons as to why the stock has seen up. Commentary coming in is also very positive. Management has said that FY26 ended on a very high note, but FY27 is going to be even better on the back of that high note as well. So that is something which was also eye-catching. And analog watches have also done fairly well. Watches business overall has seen a good growth of around 18% as a category. I think emerging business has also done fairly well, a 30% growth. The only place where emerging business is lacking is the Taneira business, but we'll have to wait and watch out for as to how that picks up. Lastly, they've said that Middle East crisis is something that they'll be watching out for. But Alex, I think the Thermax acquisition that they've recently made, that is something which will get hampered if the Middle East crisis pick up.
Middle East, West Asia.
Crisis pick up, and that is something that they'll be watching out for in FY27. So that is the overall view right now.
It's not a material contribution to the revenue either.
Not,
right,
but the Thermax acquisition makes it bigger for them. So that's why.
So that's one story, right? And that's the good out of the way. Unfortunately, you have to talk about the bad as well, and that's State Bank of India. Pull up the intraday chart for State Bank of India, and you can see that it falls off the cliff right there. And we have a few key takeaways, all right? One, of course, is that fresh slippages stand at 5,000 plus crore rupees compared with 4,500 crore rupees. That's on a sequential basis. 5,500 crore rupees. The fresh slippages number is higher than anticipated. It showcases a little bit of stress in the system. But more importantly, and I think this is absolutely critical, the core income, which is your net interest income, is showing a growth of just about 4%, 3.8% or so. It was pegged at close to 9%. The domestic NIM at 2.93% versus 3.11%, and it was expected to come in higher at about 3% or thereabouts. So yes, there was expected to be a little bit of a contraction in the NIM, but not to the extent of what was described. And if we have the net interest income number, we should pull that up, because really that is also an issue, because you had an expectation of 46,475 crore rupees. It is coming at 44,380 crore rupees. So a number of issues stacking up for State Bank of India. And the question is, does it bode badly for the rest of the PSU banking pack? Remember, you will see Bank of Baroda, you will see Bank of India as well. In fact, let's pull up the PSU banking pack, because barring a couple of days or 1 or 2 days, you've had a large underperformance by the financial pack, and particularly the PSU banking pack. So the entire pack is lower, but you have the losses that are concentrated with a couple of them. State Bank of India, one of them, and so is Punjab and Sindh Bank. But pull up the Bank Nifty as well, just to showcase how things are going, the intraday chart for the Bank Nifty. And I think a part of that is because of State Bank of India, that slide, but it was already lower by about 1%. It has fallen further since that point. So this is something to bear in mind. Pull up the broader markets as well, just the key movers in the broader markets. I mean, if I look at the Nifty 500, for example, because that will show you a few of the big movers, there are winners in trade as well. So if you look at a Thermax, for example, which stands out as a stock of the day, and we'll get you a view on that in just a bit, it's up about 11%. The entire Diagnostics pack has been in focus all of today. Mahima, and MRPL stands out. Berger Paints and the paint pack also stands out. There was a positive note that came through. Titan is up and about right there. On the losing side, you have CCL Products, which you also track, and on the earnings front, it's not done particularly well, right?
Yes. So For CCL products, I think the biggest concern right now, which is hovering, is as to how price realization will take place, because now that coffee prices have kind of stabilized, we'll have to watch out for as to how that leads to volume growth going forward as well.
In fact, we've got the management of State Bank of India at the press conference. Let's listen into what they have to say.
Officials of SBI who are present with us this afternoon. दो लाइनें अगर राइमिंग में बोलूं स्वागत में आपके, तो आपको बुरा नहीं लगना चाहिए शायद. आप आए फिजा महक गई, आप आए फिजा महक गई, आप आए बज़म चहक गई, आप आए रंगत आ गई, आप आए रंगत आ गई, आप आए महफिल जगमगा गई. We sincerely appreciate for your graceful presence. आपकी गरिमामयी और आभामयी उपस्थिति के लिए आपका हृदय से अभिनंदन, आभार, धन्यवाद, शुक्रिया, मेहरबानी. Now I request our chairman sir to please address the media and present a comprehensive overview of SBI's financial performance for the quarter 4 financial year 26. Over to you, chairman sir.
Good afternoon, ladies and gentlemen. Thank you for joining us today following the announcement of our Q4 and full year FY26 results. At the outset, I extend a warm welcome to our colleagues from the media and my fellow members of the SBI family. I also wish to acknowledge with deep appreciation the continued trust placed in us by our customers, shareholders, partners, and the broader financial ecosystem. This trust is not just an enabler of performance, but also the foundation on which we build enduring value. Let me start with a brief description of the present global and domestic economic scenario. We are meeting at a time when the global economic narrative is being rewritten in real time. Global growth is projected at 3.1% in 2026 and 3.2% in 2027 by the IMF, reflecting a phase of moderation amid persistent geopolitical uncertainties and evolving trade dynamics. In contrast, India continues to stand out as the fastest growing major economy, with growth projected at around 6.9% for FY27 by the RBI. This resilience is being driven by strong domestic demand, improving investment activity, and policy stability. However, we remain mindful of emerging risks. Recent geopolitical developments and weather-related disruption, such as El Nino, may introduce some downside risks to growth. On inflation, CPI is expected at around 3.8% in April, with a full year projection of 4.6% for FY27. That said, global energy prices and climate-related factors may create some upward bias. From a banking system perspective, credit growth remained strong at 16.1% in FY26, while deposits grew at 13.6%. Encouragingly, this momentum continues into FY27, with credit growth at 15% as of mid-April, compared to 10.3% last year, and deposit growth standing at 12.2%, up from 10.2%. Looking ahead, we expect credit growth in the range of 13 to 14% and deposit growth at 11 to 12% for the whole system. Asset quality across the banking system remains robust and capital levels are comfortable, providing sufficient headroom to support future growth. Alongside these traditional indicators, two structural shifts are redefining the operating environment for banks. Recent developments in advanced AI models have highlighted the increasing sophistication and speed at which vulnerabilities can be identified and exploited. This has placed the Indian banking system on a heightened state of alert. The industry is working closely with the Government of India and the RBI towards a coordinated cyber resilience framework. Secondly, the RBI's guidelines and transition to expected credit loss-based provisioning from April 2027 mark a significant step towards strengthening balance sheet resilience. At SBI, we are well prepared for this transition. Against this backdrop, our strategic focus is to drive high-quality growth with simplicity and resilience at the core. We are consciously moving from a paradigm of scale-led expansion to one that emphasizes productivity, capital efficiency, and risk-adjusted returns. Every strategic initiative we have undertaken over the past year is anchored in this shift. We are deeply aligned with the vision of Viksit Bharat as we continue to see ourselves as a systemic enabler of India's growth story. Our long-term strategy is therefore designed to be both commercially sound and nationally relevant. A cornerstone of this transformation is Project Saral, which I mentioned earlier also, our operations process re-engineering initiative, which is a structural reset. Having launched the first wave of identified themes, it challenges legacy constructs and reimagines the bank through the lens of simplicity and customer centricity. Key initiatives from the first wave include universal branch access, dismantling the traditional home branch mindset, single KYC across products, and automation of back office processes such as inward clearing using GenAI. Parallelly, we are investing deeply in becoming an AI-first organization. Through our Analytics 2.0 initiative, we are embedding AI across the value chain, moving towards a truly data-driven operating model. In response to increasing financialization of savings, we are deepening customer engagement through YONO, ecosystem banking, and targeted offerings for diverse customer segments. We are also actively building relationships across startups, AIFs, VCs, and global trade ecosystems to diversify and future-proof our portfolio. As the largest bank in the country, our responsibility extends beyond performance to stability. Our centralized cyber cell operates 24/7 as a unified command center, reinforcing our commitment to secure and resilient banking, combining technology and human expertise to respond swiftly to cyber risk. Each of these initiatives is designed to deliver measurable gains in efficiency, stronger risk controls, and sustainable profitability. In the above backdrop, let me now give highlights of bank's performance in FY26. I'm glad to announce that we have posted highest ever net profit of 80,032 crores, an increase of 12.88% year-on-year in FY26. Operating profit for FY26 increased by 11.25% year-on-year to 1.23 trillion. ROA for FY26 is at 1.12%, an improvement of 2 basis points on year-on-year basis. Return on equity for FY26 remained robust at 18.57%, despite raising of 25,000 crores equity capital in July 25. Domestic NIM was at 3.03%, supporting our guidance to maintain NIM above 3%. I'm happy to share that our total business has crossed 109 trillion rupees, reflecting customers' continued trust in us. In fact, our domestic business has grown by more than 11 trillion on year-on-year basis. Our balance sheet size has crossed 76 trillion rupees. Bank's total deposits have grown by 6 trillion rupees at 11.03% year-on-year to 59.76 trillion rupees. Retail term deposits have grown by a robust 14.77%. Savings account deposits have witnessed a growth of 10.6% year-on-year, and CASA deposits have grown by 9.53% year-on-year, with the CASA ratio at 39.46%. We've been able to improve our CASA ratio by 33 basis points on quarter-on-quarter basis. The deposits growth remained healthy, with growth in double digits despite competitive market environment. Deposit our foreign offices have grown at 12.7% on year-on-year basis, but in USD terms it is 2%. Credit growth has been robust and all segments have registered double-digit growth. In FY26 and on year-on-year basis, domestic advances grew by 16.33%, driven by all segments, SME by 21%, agriculture by 20%, retail personal advances by 15.22%, and corporate advances by almost 15%. Retail, agriculture, MSME, popularly known as RAM portfolio, has crossed 27 trillion rupees with year-on-year growth of 17.11%. Our foreign offices have continued to perform well with growth in advances at 20% year-on-year. In USD terms, it is 8%. The domestic credit deposit ratio was 73.08% at the end of FY26, an improvement of 337 basis points year-on-year. the bank has enough headroom to address future credit growth requirements. Our asset quality continues to be healthy. Our gross NPA ratio has improved by 33 basis points year on year and stands at 1.49% as at March 26 and continues to be at its lowest level in over 2 decades, which demonstrates the quality of our loan portfolio, proactive management, structural integrity, robust underwriting capability, and sustained recoveries. Our net NPA ratio has also improved by 8 basis points and stands at 0.39%. The consistently improving asset quality is also reflected in our credit cost, which is at 0.37%. The NPA book is well provided with PCR at 74.36%. The bank remains well capitalized and we have sufficient headroom to take care of business growth requirements. Our capital adequacy ratio has improved by 115 basis points year on year and stands at 15.4%. CET1 ratio has also improved by 148 basis points to 12.29%, and both the ratios are well above regulatory requirements. Digital adoption is central to our vision, enabling a multi-pronged transformation focused on enhancing customer experience while optimizing costs. By shifting 98.7% of transactions to alternate channels, we are scaling both efficiency and growth. The successful rollout of the new YONO platform has become a massive acquisition engine with over 4 crore users in just 3 months' time. Now, YONO has more than 10 crore registered users. 66% of new saving accounts originating on YONO platform in FY26 demonstrate our successful transition to a digital-first institution. We are effectively meeting the evolving needs of new generation and a diverse nationwide customer base through our formidable physical and digital channels. Our subsidiaries continue to perform strongly and remain leaders in their respective segments. They are important drivers of value creation, and we will continue to nurture them. If I were to summarize our approach, we are building a bank that is simpler in processes, smarter in decisions, stronger in balance sheet, and sharper in customer focus. We are proactively strengthening our CASA base and empowering our workforce to lead in a transforming financial landscape. We are actively reshaping our balance sheet by enhancing digital capabilities, broadening funding resources, and leveraging YONO for customer acquisition. SBI, by virtue of its scale, has always been a reflection of the Indian economy, and we aspire to not just remain a participant, but have become a key enabler of that journey. To conclude, I would like to thank all of you once again for your continued engagement and support. We remain committed to delivering sustainable, responsible, and long-term value. As India advances towards its aspirations of becoming Viksit Bharat, we take pride in playing our part in that transformation. Thank you for being with us today. My team and I will now be happy to take your questions.
Thank you, Chairman, sir. We now move on to the media question and answers. To ensure a smooth and orderly session, individuals will be called by names, and we kindly request everyone to please limit themselves to 2 questions only, and please avoid asking similar type of questions. Now, the first question will be asked by Ms. Siddhi from Bloomberg.
So, hi. Can you hear me?
You'll get the mic.
Can you hear me, sir?
Yes.
Hi. Congrats on the results. I have 2 questions. My first question is, your corporate loan growth has been pretty healthy. I want to understand the kind of corporate book pipeline that you have and the kind of credit growth trends you see for FY27 at the backdrop of the West Asia war. That's my first question. If you answer that, I'll ask the next one.
Okay. So let me start with the credit growth. I think that's a very moot question. Credit growth, I always mention that is a function of macros. As I said in my speech also, the robust credit growth what we witnessed last year, normally in the Q1 there is a dip in the credit growth over the Q4. But we are not seeing that dip. The robust demand continues to be there. while still, I think to qualify whatever I'm saying, the macros play an important role. How long this West Asian conflict will go on and how the inflation and demand moderation will play out. Subject to all of them, I still believe that we are sticking to our earlier credit growth estimate of 13 to 15% for the current year also. So while we have had a wonderful quarter in terms of Q4 credit growth, almost 16-17%, we believe that 13 to 15% what we have given guidance earlier, we continue to give that guidance. And we see good amount of pipeline, as you mentioned, is about 5.5 trillion rupees. Equivalent corporate credit pipeline is there. Apart from the corporate credit pipeline, I think there is a good growth across the segments, as you can see on the slide now. From the presentation, we have grown across the segments. RAM, corporate advances in double digit. We are continuously seeing that credit growth in the current quarter also, which gives us confidence that 13 to 15% credit growth is eminently possible.
So my second question is on your net interest margins. They've seen a sharp dip, and I guess that's the reason why stock has taken a hit to today. Wanted to understand if you could just explain the dip in the number, and can we safely now say that the worst for margins is now over, the bottom is now here?
I think in the last quarter, in Q3 also, we did mention that a couple of rate cuts which have happened in December, middle of December, have not been fully taken in the EBLR book. So that is 25 basis point cut in December, and also we had a 5 basis point MCLR cut. That's one main reason where EBLR book got repriced. The second thing is, there's been a substantial growth in the EBLR book itself. If you have seen both home loans and MSME, which are essentially linked to the EBLR, that also has contributed to the NII reduction. While we have been very successfully containing the cost of resources, in fact, the cost of resources has come down over the last quarter, and the NIM guidance what we have given, exit NIM of 3%, I think we were able to fulfill that, and we have given this guidance that the NIM will be, exit NIM will be 3%, and that has been achieved.
All right. So that last comment on the net interest margin, which is perhaps one of the reasons why the stock is getting impacted. Two aspects, I think, or three, actually, if you think about it. And we'll get you more details. Our correspondent Piyush Shukla is at that press conference, and he has questions for the management. The three that I see, one is the core growth, which is the net interest income, is coming at 4%. And the expectation of the street was more than twice that rate of growth at 9%. So that's a problem area. The second, the net interest margin has actually contracted, where seemingly there was a guidance given that it would be flat, but the domestic NIM has come in at 2.93%. The comprehensive NIM, and I think that is what the chairman of State Bank of India was referring to, might be actually around that 3% mark. But the fact that the domestic NIM has slipped by close to 20 basis points is not really looked at very pleasantly, particularly in a scenario where something like an ICICI Bank has managed to retain their net interest margin well above that 4% mark and has been able to defend it over the course of multiple quarters, not just in the fourth quarter. And finally, the fresh slippages standing at over 5,000 crore rupees during the quarter is something of a concern area. 5,520 to be precise, compared with 4,500 crore rupees in the previous quarter. But we'll get to some of these aspects. We're joined by Kunal Shah, who's Senior Technical and Derivative Analyst, Mirae Asset Sher Khan, as well as Ashish Chaturmota, who is Managing Director and Fund Manager at Apex PMS JM Financial. Gentlemen, thanks so much for taking the time. Ashish, I want to come to you first because we're talking about State Bank of India. And apart from what I've highlighted, there's also the valuation question mark, which is at very close to that 1,000 mark. It's currently at 1,030. I was looking at it. If you assume a 15% book growth over FY27, it is currently trading at very close to 1.4 times, which is not the most expensive. Would you agree?
Hi. So, I think from a valuation perspective, we are not very concerned about the valuation, because if you look at the credit growth in most of the PSU banks are in a very, very strong double digit, and obviously better than the systemic loan growth. And take the case of SBI, which has also seen almost 15-16% kind of loan growth. But the bigger challenge which SBI is facing now is the asset quality, where we have seen the slippages surpassing above 5,000 mark versus the last, versus the quarter-on-quarter or YY. So I think that's where I think the market is little disappointed. And at the same time, when you have seen most of the private peers, let it be ICICI or Axis Bank, both have managed to sustain the NIMs. There is a deterioration in NIMs as well. So I think the asset quality concern and obviously the pricing is also getting impacted. So both is getting reflected into the today's downfall. But as far as valuation is concerned, I think X of subsidiaries valuation, SBI is trading at around 1.2 times forward, well price to book valuation. So that gives us a comfort that at around 1,980, I think that would be area where you will see a lot of buying interest again coming back to SBI. So yes, some pain, but again, stock where we will see a lot of buying interest at the lower end of the range.
Okay, all right. So that's the view coming in on SBI, now down 5.6%. Some recovery, at least from its day's low point as we speak. But Kunal, very good afternoon to you. Your quick take on the benchmarks right now, the Nifty 50 as well as the Bank Nifty right now, because there is pressure on the Bank Nifty on the back of all these PSU banks going down right now. What's the take right now before we get into the weekend? People would probably not want to take in their positions and go over the weekend.
Good afternoon. Good afternoon to everyone. See, I think for SBI, what we are seeing is that on the 1st of Jan, when the correction started, as well as on the 2nd of Feb, 990, 980 has been that demand zone. And the larger term trend still continues to be positive. You can expect a dip towards this support zone, and probably from there onward, any reversal would give you a good confirmation for the uptrend to continue on the upside. So I think for the weekend, no need to carry long positions at the current levels. Probably you might get that dip of 30-40 points odd on the downside, and then probably one can go on the long side for SBI. Coming to the Bank Nifty index, I think overall what we have seen in the Bank Nifty index, it has been stuck in a broad range. 54,500 has been the support zone, and on the higher end, the resistance what we are facing for the Bank Nifty is somewhere around 56,500, 600 zone. So I think this is a broad range in which Bank Nifty is stuck. We need to see participation from the big boys, ICICI, HDFC. Once that kicks in, then probably you will see a good breakout in Bank Nifty on the upside. So Bank Nifty is still stuck in a range. There is no trade currently at the current levels, but probably Nifty is something which is still looking positive, trading above the 20 DMA. Even the dip what we got should be utilized as a buying opportunity. Once we close about 24,350, we'll get a breakout confirmation, which will head the index higher toward 24,700.
Buy the dip is the call that's coming in on the Nifty 50. But Kunal, what about your picks for the day?
I think overall what we have seen that broader markets has been the outperformer. Now you might see some profit booking coming in there going forward. So no need to be aggressively long on the broader markets at the current levels. It's going to be now a little bit stock specific. And if the large cap starts to come in, then probably that will have a good move on the upside here. But having said that, there are still a couple of stocks where the buying momentum could continue, and you can see some more upside even from the current levels as well. One stock which is there on my radar here is NBCC. 97, 98 was the important hurdle zone for the stock, and we broke out in today's trading session with volumes. So this move is likely to be extended on the upside, and I'm expecting a target of close to around 105, 106 on the upside. So again, from the current levels, more 4 to 5% upside could be there in the next couple of trading sessions. So for me, NBCC is a buy at the current levels, keeping a stop loss of 95 on the downside, looking for targets of 105, 106 on the upside. The second stock over here, which is again on the buy side as well, and I see here also the buying momentum is likely to resume on the upside, is Tata Motors passenger vehicle, that is TMPV. So TMPV again has witnessed a fresh breakout a couple of days back, and now it is consolidating at the lower end. I'm expecting this to break out on the upside. So this would be a buy for me at the current levels with a stop loss of 344 and looking out for targets of at least 372 to 380 on the upside.
Ashish, your quick view on Titan, because while EBITDA and EBITDA margins were not up to the expectations, the street has completely ignored that, right? We've seen the street is probably liking the growth, the volume growth, the buyer growth that's come in for Titan. What's the quick take here?
So definitely, not just the volume growth, but also the kind of store additions which they are doing and the different kind of formats being added, and the way organized markets are gaining a lot of traction. So I think, and now gold has also started stabilizing at lower end of the range. So both gold, silver as a precious commodities, we are seeing some kind of traction getting built up. So I think any recovery in gold, you will see a good reflection coming into Titan as well. And before that, because of these store additions and the kind of volume pickup which we have seen, plus the performance of some of the different formats is clearly indicating that the trend is very, very positive for Titan. And today, we have seen a very massive volume based buying interest coming into stock at an all-time high trajectory. So clearly indicates that new interest or fresh interest is getting built up into the stock. So I think a trajectory towards 5,200, 5,500 positionally could not be ruled out in Titan.
Another jewelry counter, Alex, has reported its numbers. Kalyan Jewellers, where revenue has seen an uptick of around 66%. EBITDA growth at 84%. Here, in fact, margins have seen an uptick at that 7.2% mark versus that of 6.5% earlier. And net profit has jumped from 188 crores to 410 crores. And we're seeing some spike coming in the counter as well. If you can try to pull up the charts for Kalyan Jewellers, it's now trading around 2.6, 2.7% higher as we speak. There you go. It's cooled off a tad bit from that, but still trading 2% higher. So that's with regards to where Kalyan goes. But Thermax is the other one that's been zooming in trade today after reporting a strong Q4 performance led by robust order inflows from industrial segments. And Puneet joins us with more details to tell us as to what's worked for the counter this quarter.
Well, thank you for that. It's been, of course, led by the numbers which have been very strong in this particular quarter. Revenue is up 22%, EBITDA is up almost 25%, with margins seeing almost 100 basis point increase as well in this quarter at almost 10.9%. Net profit subsequently has increased by 18% as well. But order book as well as a one-time huge order win in this particular quarter has given the street a lot to look forward to. So one of the higher orders are driven by industrial segment as well, and they also secured a boiler package supply order for 1,600 crores. Now this is a large win, almost 50% of the 4,490 crore order win. 1,600 crores just came from one large order, and the street is now optimistic that they could have such more orders in FY27. Now the other aspect that profitability also improved because of a stronger performance of the industrial segment as well as reduced losses of the industrial infra segment for the company. And finally, the data center continues to be a big opportunity, as the company has highlighted in the past as well. Now, as I mentioned, order book 4,490 crores. Out of that, 1,600 crore was the one large win, and hence beat all estimates in that sense. Outstanding order book continues to be very strong. So 42% coming from the power space, and 13,600 crores is the order outstanding at the end of FY26. Now, I want to just quickly highlight the key conference call highlights as well. So let's quickly move on from this and tell you about the first one, which is the company in its conference call today morning at 11 a.m. said that they are seeing a good pipeline from inquiry of sectors like steel, cement, power, gas, oil and gas and power. FY27 revenue growth is expected to be 27% higher in terms of the order balance. And finally, growth has been strong despite the potential of what we've seen in the Middle East. So overall, very good set of numbers, but commentary is driving the second leg of the move today.
All right. So big move in Thermax. Thanks so much for that, Puneet. And remember, this is a stock that has been in focus in the recent past because the management has guided towards an improvement in the trajectory of the margins, because some of those legacy projects were weighing down on the margins. Those things are improving as the industrial business in particular is seeing better execution. Before we go to our guests on some views on some of these stocks, including Thermax, let me get you all of the buzzing news from the dealing rooms. In fact, it is that time of the show where we go across to Somit Sarkar to find out what the dealing rooms are telling him. There's quite a bit, Somit, in the way of big earnings that have come through and big reactions as well. Is there anything on that you're hearing?
Well, nothing on the numbers that have already come out, but one of the stocks that the dealers have highlighted on company which will be reporting its numbers. Firstly, that is Indian Hotel. Now, there are buy flows on the PMS desk and dealers are indicating that the fourth quarter numbers could be much better compared to what the street has been anticipating for this counter. For Godrej Consumer, there are buy flows on institutional desk. Dealers are expecting strong management commentary to come in the analyst call, which will be held on Monday. And there are buy flows that are coming in right now on the counters, is what dealers have indicated. For Electra Green Tech, the stock is up, I believe, around 10% odd. Now, there are buy flows on the large HNI desk. At one point of time, the stock was up nearly 10%. It's right now up around 5.5%. And dealers are expecting a positive news flow regarding some tie-up that could be announced. And hence, we had seen that big spike coming in on the counter. And lastly, when it comes to Paramount Communication, that stock is up around 15% in trade. There's a buzz on the street that there could be a potential fundraise via preferential issue, and that is the reason the stock has now hit an upper circuit of 20%.
Absolutely, I was just going to point that out. So, Amit, even while you were speaking about it, hit upper circuit. Thanks so much for that. We'll circle back to some of these names, but before we do, I don't want to get Ashish Chaturmata's view on Thermax. It's cooled off from the high point of the day, Ashish, and there's promise that the prospects are going to be good, especially if you look at that order book exit at the end of the fourth quarter. So well above 10,000 crore rupees, it looks pretty robust, but execution is going to be key, and the fact that margins are set to improve further. What would you say?
So definitely, I think the key highlight would be the order book. And if you look at the year-end order book of close to 13,604 crore, is close to 27% YY growth. And the management indicated, order book growth of almost more than 20%. So I think management has clearly surpassed, the target has clearly been met. And I think markets are very, very positive for this kind of strong order book growth. And particularly the data center order book, is also a very positive thing. Apart from that, I think the margin profile of the company is also going to improve a lot, because a lot of these, previous orders or the legacy orders where they were at a thin margin, but now the newer orders, we are going to witness higher margins, and that's where the margin profile of the company is going to improve. And this is going to get reflected into the performance of the stock, which has seen a very sharp, I would say, reaction post results. So I think now structurally, we believe that stock is poised for a move towards 5,100 at least in the short to medium term time frame. So yes, Thermax is one of the preferred bet within the entire capital goods space.
5,100 up to 5,100 move can be expected on Thermax as per Ashish. But Kunal, I think two stocks that stood out for me in Somit's HOS were Indian Hotels as well as Godrej Consumer, both seeing buy flows on PMS and institutional desk. Your view on the charts for both of these?
Yeah, I think for Indian Hotels, definitely looks like a strong counter. Already we have seen a time correction in the stock in the last 1 year, and now we can expect the stock to see some outperformance. Already the structure has started to become positive with heart of high bottom formations on the technical charts. Key hurdle for the stock of 670 has been taken out in today's trading session. So I'm expecting this move to continue on the upside and go towards the mark of 700, 715 on the upside.
Got it. On that note, gentlemen, I'd like to thank both of you for taking the time. Apologies, we weren't able to spend as much time speaking to you as we'd normally like, but that's because of the earnings. Thanks so much for taking the time. But if we slip into a very quick break, we'll talk about more stocks on the other side, so do stay tuned.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
You're a filmmaker, you're a psychologist. Why are you in the restaurant business? Why is that business about dosa?
Always missed the taste of that benne dosa that I ate back home in Bangalore at my favorite Darshini's.
Akhil and I had this routine. We'd land in Bangalore and straight away before going home, we'd stop, get a dosa and then go home.
trying to understand how you go from a craving, and I like this particular dish, to, hey, let's give up our full-time jobs and start a dosa business.
I wanted to be a filmmaker, I wanted to be an actor, I wanted to be an IAS officer growing up. I never had a dream of opening a restaurant. Two people who don't know anything about F&B, never opened a restaurant, not trained anything in the culinary field, decide to open a small dosa cafe and people are waiting to eat your food. It is unimaginable.
Welcome back. You're watching India Market Close. We're winding down to the close of the trading week and we're seeing cuts of about 0.6% for the Nifty 50. A significant portion of that is likely to be State Bank of India. In fact, pull up the contributors chart for the Nifty 50. It's trading with cuts of about 6.4% or thereabouts after the earnings. And State Bank of India on its own accounting for 65 points of the declines. Titan doing particularly well, but because of the weight that it has, only contributing about 18 points or thereabouts. Already there's a first cut from one of the brokerages, and this is DAM Capital that is written in, talking about why this is a disappointment. You had the NIM, the net interest margin, that is declined by 18 basis points on a sequential basis to 2.8%, and that has been a negative surprise. The treasury losses, now this was expected to take place, but according to DAM Capital, it's worse than expected. It's slightly higher than expected, and that has led to lower other income. The slippages of about 5,500 crore rupees are marginally higher than expectations of close to 5,000 crore rupees. The loan growth of 5.4% sequentially, however, was better than expected, and this was also priced in more or less. Corporate has actually grown quite well. It's a robust 7% sequential growth, and retail has grown as much as 4% on a sequential basis. The gold loans have grown as much as 23% on a sequential basis and over 100% year on year. The NIM guidance was to be stable or more or less flat, and the poor exit NIMs or net interest margins will impact the outlook for the bank as industry is witnessing pressure to increase deposit rates as well. The management, however, has mentioned, and we put that on the screen for you, that the net interest margin for FY27 is expected to be 3% or upwards of that, which could be a bit of a breather. So bear in mind that State Bank of India is likely to be in focus in the coming days as well. Milan Vaishnav with us, founder and technical analyst, Gemstone Equity Research. Milan, good afternoon to you and thanks so much for taking the time. Let me start with a broader question for you. The crack in State Bank of India has only exacerbated an underperformance of the Nifty Bank in the recent past, barring one day where it moved particularly strongly. I think that was day before yesterday. It's largely been an underperformer. Does that trend continue in your opinion?
Yes, in terms of SBI in particular and Nifty Bank in general, I believe this trend will continue because over the past couple of weeks, in fact, I have been regularly maintaining that the financial services and the banking space, especially PSU, is losing ground on the relative front. And we are likely to see relative underperformance from this space. So something this is not coming to us, at least as a surprise. And coming to SBI in particular, it found a reason in not so good numbers, but even if you zoom out a bit and look at the long-term charts, SBI had already formed a lower top at around 1100, and it had already shown signs of initiating a secondary downtrend. And so I believe that it will continue to stay weak for some more time. All upsides may find selling pressure, and it may not be a big surprise to us if it goes down towards 970, 980 odd levels.
All right, so that's the view coming in on SBI, but on this side of the show, we are also joined by Neeraj Devan. Neeraj, very good afternoon to you. We've spoken enough about SBI. We've been constantly talking about this counter. It still continues to be under pressure, but something like CCL products, global spirits, etc., from the broader end of spectrum are also not doing well. From a slew of these earnings that we've seen, any of these that stand out for you in the past couple of weeks that we've seen so many earnings?
I think, good afternoon first. So earnings have been pretty much okay this time. If you see some of the defense companies, if you see some of the private sector banks, the earnings have not been bad. Even some FMCG companies have come out with decent set of numbers. Nestle is one example from there. And, I feel that there's no basically complaint as far as the earnings season is concerned. So there have been some accidents. Britannia didn't come out with the kind of earnings people would expected it to. There was some pressure in the margin there, and today's State Bank also. So maybe some better operating profit would have helped it. So these just barring couple of these 2-3 cases, earnings have been pretty much okay. And I feel that now in the last few days, you'll get a lot of broader market earnings. Because, the rally also that you've seen recently has been from the mid-cap, small-cap. And those earnings normally bunch up towards the end of the earnings season. I think now, the next 10, 12 days, that will be important to watch.
Yeah, absolutely. Particularly because of the outperformances you've called out, and quite a degree of outperformance at the benchmark level at the very least. Let's talk about diagnostics companies. And by the way, this is volume-led growth along with cost efficiencies that have helped diagnostic stocks deliver a strong Q4. That entire space is buzzing in trade today, from the likes of Vijaya Diagnostics or Thyrocare, all of them doing particularly well, though Thyrocare has lost a little bit of ground. Let's go across to Varsha because she's analyzed the earnings and the reasons behind the rally. Varsha, how does it look?
Well, fantastic quarter, I would say, for all the diagnostics company who have announced results till now. And hence, you're seeing Metropolis also buzzing on the back of, strong numbers expected there too. Let's see what are the key reasons why diagnostic companies are buzzing in trade today. First of all, starting with the Q4 FY26 numbers of the diagnostic company announced so far, you have Dr. Lal Path Labs, which saw volume-led growth with improvement in the core margins. Even Thyrocare, delivered strong margin expansion, which was driven by cost efficiencies, and hence you are also seeing Thyrocare in buzz. Also, if I talk, Vijaya Diagnostics, reported healthy growth, which was led by higher footfalls. Now, talking about the pricing pressure which was actually seen in the industry has been seen improving. The B2B pricing erosion is being stabilizing after prolonged competitive intensity. Discounting intensity has been reducing across, institutional segment. Also, better realizations are being seen in routine and specialized testing. Talking about the price hike, companies are indicating kind of gradual price hikes after weak pricing phase that they have seen. Selective hikes plus, better test mix will drive the RPOP improvement for the companies, and the urban markets are expected to lead pricing recovery over here. Talking about the benefits of consolidation, unorganized, we all know that, diagnostic industries work mostly into unorganized segment, while the labs are losing share to organized one. Top players are gaining from the brand trust, wider network and scale, and also the improved bargaining power will support margins for the company. Lastly, talking about the shift towards high margin business, the high contribution from specialized testing is one of the reasons. Preventive healthcare packages are gaining traction, and focus is on advanced diagnostic improving profitability. Lastly, how Street is viewing, well, the brokerages are bullish on margin recovery and pricing normalization for all the diagnostic companies. Even operating leverage plus mix improvement will drive earning upgrades according to the analyst, and the structural growth story is intact with rising healthcare awareness. So overall, a strong quarter is being set for the diagnostic industry overall, and hence you're seeing all the stocks going in buzz.
Yeah, absolutely. Thanks so much, Varsha, for that. The diagnostic stocks are in good health. Milan Vaishnav, do the charts also indicate that that's likely to be the case going forward as well? And would you buy into them right now?
See, entire diagnostic space is quite overextended now on the charts. More so in case of Vijaya Diagnostics, which has run up quite ahead of its curve, where some consolidation or mean reversion cannot be ruled out once this euphoric run or reactions to the numbers are behind us. Dr. Lal Pathlep has got some room on the upside, so has Thyrocare, despite it coming off from its high point. But I think we can certainly stay invested in this space. That is point one. And the next point is that so far as taking fresh exposures, I think we should do it in a very calm and modest and moderate way. We should not be going all out to chase this kind of rally, because aggressive buying at these levels may not come with a good risk to reward ratio.
All right. So that's the view on diagnostics. Now, by the way, if you think about it, for most Indians, and I think this is not just Indians, if you think about it, most people, one of the biggest purchases that they will ever make is a house. But that house, and actually a home, is much more than just that square footage or a location pin. And in fact, behind every purchase is a story of ambition, timing, trade-offs, and life decisions. And to that end, NDTV Profit has got a special show lined up. It's going to start very shortly. It's called The Habitat. It's going to be hosted by someone that you probably recognize, real estate journalist Vishal Bhargav. And it'll go live on NDTV Profit Originals YouTube today at 7 p.m. So make sure you catch that first episode. But just to give you a sneak peek, we've got Vishal in studio with us. Vishal, first of all, welcome. And so glad to have you in studio with us and looking forward to the first episode. A lot that is happening in the space, right? Whether it's the price story in Gurgaon, whether it's the rent story in Mumbai. What's catching your attention right now?
See, right now I think Indian real estate is at that exciting moment. There's a lot of adventure happening. Gurgaon is at the peak of adventurism. Yeah. Mumbai is in a way, I think it's in that 50-50 territory. You don't know where exactly it'll go. But the overall direction is, I think, stable. I'll put it in that way. Bangalore has been stable for the longest time. But I think it's an exciting space. For me at this point, though I'm based in Mumbai, the one market I'm monitoring the closest actually is not Mumbai, it's Gurgaon. Because that gives you a sort of thrill that Mumbai and Bangalore guys are far too simple and sober. The drama is really in Gurgaon.
So, but okay, so then let me ask you this, right? From the perspective of what you might also cover on your show, which is that a lot of people look at that per square foot price. They look at the investment, they look at appreciation. They don't generally look at anything beyond that. What are they missing if they look at purchasing and holding of real estate?
See, looking at only per square feet will be a terrible way to buy a home. Okay? Per square feet in a way should be probably one of your, I think, bottommost priorities. Most home buyers make the mistake of putting that at the top. Partly it's because budgets for homes make sure that most buyers are compromising. So your per square feet becomes the default setting. But if I was to guide somebody how to do it, I'll tell him to keep that maybe at his fourth or fifth priority. Buying a home is a very simple process. We have somehow complicated it by adding so many different elements. Do it the old-fashioned way. Choose your location right. More than that, choose your developer right. Then look at the layout. Then maybe come to things like the per square feet.
Is that true in every market? And of course, real estate is looked at in micro markets. You've said this before, and I think a lot of people have said that as well. But I think it was I can't remember which CEO of a real estate company was talking about the fact that your real estate prices and infrastructure are inversely correlated, right? So if your infrastructure is bad, your real estate prices in that place are significantly higher because you're willing to pay a top dollar to stay closer to the city centers. So in that sense, you have to think about location, but the same rules will not apply if you're going to a smaller town or city.
See, smaller town, while they provide you a lot of peace, and I think people have a romantic notion of, that we'll go to a small town and settle down. Most people I know who have gone there it hasn't quite worked out according to plan. Cities have a vibrancy and energy, tier 1 cities. So people, once you've tasted that, you invariably want to get back to it, unless you're so fed up of it. And I've not seen too many people who have made the migration from tier 1 to tier 2 and not returned to tier 1. So, the fundamental of a tier 1 and why it keeps going is actually very simple. Tier 1 cities are made up by energy, by people. Infrastructure is the X factor, or I won't say X factor, it's a Y factor. X factor is something else. The Y factor is that, why are prices so high? Like you said, the Tata Realty
Yeah,
MD.
it was Tata,
Yeah, he said that, right? Bad infrastructure leads to higher prices. Just by that benchmark, all Indian city home buyers are doomed then, because the infrastructure is collapsing pretty much everywhere. That's true.
Vishal, you've said that buying a home is kind of an emotional decision disguised in a financial one. Just want to get a sense, because there's a never-ending debate of buying a house, whether it's an asset or liability, right? What do you think of that?
See, buying a home is mostly an asset. It can turn into a liability if you're buying with the wrong developer and buying under construction.
Yes.
Because unfortunately, in real estate, it's a binary call when you buy a home under construction. If you buy it and it gets stuck, the value is zero. You can't sell it. Unlike a stock, it can go down 10-15%, it'll be lower circuit, 2-3 days, you can get out. In under construction, stall projects, the value becomes zero. So it's a emotional decision, which somehow people rationalize it. So that's why emotion trumps the financial part of it, which is why some properties have obscene prices. Why does it have it? Because after a point, the emotion takes over.
Correct. So just one last point, and maybe just a quick answer, which is the first episode goes live today. A sneak peek on what to expect?
I think what to expect is you'll get real people, real conversations, real experiences, real learnings. I think one of the dilemmas for most home buyers is that they get to see a lot of houses, but not homes, and the decision making behind them. And invariably, I think through this show, the aim is that people learn from the journeys of people who have already bought a home, where they went right, where they went wrong, and how they can adopt it in their home buying decision.
Oh, fantastic. I look forward to watching the first episode. Vishal, thanks so much for taking the time. Let me go across to Neeraj Zivan just to get a view on the real estate space, not necessarily from the perspective of buying a property, though I'm hoping that you'll find the new show as useful as everybody else tuning in, but from the perspective of the developer. Would you suggest buying into any of them right now?
Yeah, actually, you've seen recently over the last 7, 8 days, 10 days, there have been some value buying which has happened in real estate. And a lot of the stocks have moved up also. So I think if one is still stock specific, I would recommend that, stocks in the NCR region, they've not really gone up so much. So I feel there is definitely still value in these stocks. So if one is looking at investing for a couple of years, I think it's still one can look at investing.
So that's the view coming in on the real estate pack. Milan, what Neeraj was just mentioning, we've seen a lot of value buying coming in the real estate, but when we take a look at the Q4 number, it's been a mixed bag. There are some counters which have done exceptionally well on the back of good collections, pre-sales number, etc. There are some counters that are lagging as well. On the charts, any of the counters that stand out for you?
Yeah, there are in fact two of them. One is Godrej Properties, and the second one is Oberoi Realty. These two look good on the charts.
Okay, so that's the idea of the real estate pack as well. But Milan, the other pack is the FMCG pack, where we've seen, again, a mixed bag. There was, Britannia, which was disappointing, but Dabur did very well. Any of these counters where you think there could be, some breakout possible, or where charts are looking attractive?
None of them, because Hindustan Lever or Dabur or Nestle or Britannia, they have seen some good rebound from the lower levels, but they still continue to rule under some major overhead resistances. So I think we can look at locking short-term gains if anyone is sitting on, or else long-term investors may stay invested, but making any aggressive fresh entries on this space is something I would not recommend.
Okay, all right. Let's talk about the key stocks that are buzzing, and we've spoken about quite a few, and certainly the big ones, but let's go across to Jasmeet to perhaps round up the list for you. Jasmeet, what stands out today?
Well, thank you for that. I have 4 stocks which are buzzing on the back of the earnings. The first one is Bhartiya Airtel. Well, now the African arm of the Bhartiya Airtel posted their Q4 numbers, and they were quite strong in terms of the overall performance. If you look at the overall revenue growth, it's up 3.7%, while the EBITDA is up 6.3%. In terms of the overall ARPU, even that has stayed slightly stable for the company at $2.7. While the second counter is Sonata Software. While this stock is buzzing in trade on the back of that strong Q4, and you also see a shift coming in this particular counter. The overall cloud and data data segment has increased its percentage of revenue from earlier 54 to up until 65% in FY26 altogether, and the management says it's going strong going ahead. Further, the company has also signed 2 large deals in the Q4, and they see the deal pipeline to be healthy for the coming quarters as well. While the third one is Sandhur Magnesium, while the company has noted a record quarter FY26 with the highest ever EBITDA margins. Now, what they say is the overall magnesium ore demand has increased well for the company, and Q3, where the rates are fluctuating, they see the Q4 to be much more stable and the coming years to be with the same stable rate. And further, the increase of infra expense by the government is helping the company as well. While the last one is the Kenta Metal of India, while we see a strong Q4 coming with this particular counter, where the company has posted a double-digit revenue growth and double-digit EBITDA growth as well. The hard metal segment of the company has led the overall growth, is up nearly 20%, while the machine and solution part of the company saw slight softness in the Q4, while it's flat on QOQ basis.
All right, so that's quite a bit. Thanks so much, Jasmeet, for that. And on that note, I'd like to thank both Milan as well as Neeraj for joining us this afternoon, and wish you a happy Friday and a happy weekend as well. And I hope it stays calm and peaceful, and we return to work on Monday with bright smiles. All right, let's talk about the markets and see what's happening. We're ending at least off the low point of the day, but not too far off the low point of the day. Cuts of about 150 points or thereabouts for the Nifty 50, 24,176. The broader markets showing relative resilience. Pull those up. The mid-cap index cuts of just about 0.2%. Small-cap index gaining about 0.2%. In the advanced decline, now favoring the declines. It actually switched midway through the session. I also do want to pull up, before we get into the closing for today, the weekly chart, if we can, for the Nifty 50 and for the mid-cap 150, if we can do that. All right, so we're still gains of about 0.9% for the Nifty 50. Pull up the mid-cap index and the small-cap index, and you will see 3.6%. So it's an outperformance for the mid-cap index. It's at or very close to an all-time high, and 4% plus in the week gone by for the small cap 250. Important to note that this is on the back of a 13% gain in the month of April for the mid-cap index and a 17% gain for the small-cap index. So it's quite the stellar return.
Yeah, I think that shows the strength, right? Now we're seeing buying coming in the broader end of spectrum, and that shows that markets now are going at the buy end of spectrum, and soon we'll see that buying action coming in the benchmarks as well. But quickly, a sectoral heat map also before we go to what to watch as to how sectors have fared today. Nifty IT leading that pack, up 1.2%, followed by the consumption and consumer durable, which is up by about 0.7%. But clearly, PSU banks, in the lower end of that chart, down by about 3% now, dragged down by SBI, the heavyweight on the Nifty 50 as well. Banks also down by about 1.3%, below the 55,600 levels, if I'm not wrong. The financial services also seeing a downtick of around 1.7%. Metals is also seeing good profit booking today. It did see some action, in the first 3 days, but today seeing profit booking. The oil and gas also down by about 0.9%, and you have realty, which has also seen profit booking today by about 0.6%. So that's with regards to where the sectoral heat map goes.
Yeah, and we're winding down the last few seconds. So let's pull up the Nifty intraday chart just to see where we're closing out, or the Nifty heat map actually, just to drive that home. Okay, so this is so just about 0.6% more or less where we started winding up. We're off the low point of the day certainly, but significantly off the high point of the day, which also is in negative territory. The heat map for the Nifty 50, gains of close to 5% for Titan, Apollo Hospitals in the top gainers list as well, but not heavyweights, and so therefore they weren't able to really move the needle. Asian Paints up about 2.7% on the losing end, where Mahima is standing just about 6.7% and close to the low point of the day for State Bank of India. That really is the story of the day, Friday. But there's lots to talk about, and we'll take that forward in the editor's cut. I'd invite you to stay tuned. From Mahima and myself and the team that put this show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
you're a filmmaker, you're a psychologist. Why are you in the restaurant business? Why is that business about dosa?
Always missed the taste of that benne dosa that I ate back home in Bangalore at my favorite Darshini's.
Akhil and I had this routine. We'd land in Bangalore and straight away before going home, we'd stop, get a dosa and then go home.
I'm trying to understand how you go from a craving, and I like this particular dish, to, hey, let's give up our full-time jobs and start a dosa business.
I wanted to be a filmmaker, I wanted to be an actor, I wanted to be an IAS officer growing up. I never had a dream of opening a restaurant. Two people who don't know anything about F&B, never opened a restaurant, not trained anything in the culinary field, decide to open a small dosa cafe and people are waiting to eat your food. It is unimaginable.
How do you get a branding like Penne? How do you get Deepika Padukone to show up to your place in the first week?
I don't know Deepika. I got a call and I answered the phone. I thought it was a work call. Nikhil said that Deepika wants to come to Benne, and I said, Deepika is your sister? He said, no, Deepika Padukone.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open. Now
Welcome. You're watching Editor's Cut, and we have the one and only Pankaj Murarka in our studios as guest editor today. Pankaj, welcome to all the madness we have post-market close every Friday.
Thank you so much, Tamanna. It's a pleasure to be here.
Yeah, it's been an exciting week, hasn't it, folks? So you've started with the election results. Yeah. Where pollsters, at least some of them, got to say that, look, even I get it right sometimes. After so many elections where they fumbled, feeling of disbelief, euphoria, then pessimism, then euphoria again on an Axios report which said there's a one-pager now already. So at the end of it, you're as confused as ever.
Yeah, actually couldn't have put it better, right? Because at the end of every Friday, we feel that this is the same confusion that existed last Friday and possibly will exist the next Friday as well, because you never know. I mean, the definition of EBITDA has changed now so much. It's after Donald Trump announcements. All as confused as before, for sure.
Yeah, I agree. And so I think more than anything else though, my worry is looking at some of the numbers is that Q4 presents a little bit of a glance at what has occurred, but I think that feels like too far into the rear view.
Yeah.
And already the market seems to be getting worried. If you look at FMCG results, they weren't too bad.
But
they were actually okay. But then the market is already pricing in pressure in Q1 and saying, I'm not going to give you too much of a breather on that because the outlook is not looking very good.
And I think taking from where Alex left is there is a distinct divergence if you have to look at in terms of value and growth in terms of market cap. So if you have to look at mid caps, small caps and large caps for FY27, there is a distinct gap coming in between value and growth. And I think that's what we should be looking at as well, because so far the fourth quarter has given you a good beat in terms of numbers overall, and we should talk about it as well. But what happens in the first half on the back of the impact is crucial.
Yeah.
First half, Pankaj.
Let me intervene here. Maybe let me make 2 points. First, on the markets, it's very true. Markets are a reflection of the economy. It's the economy, if we zoom out and just put, let's say, the last 5 years in perspective, last 6 years, because this recovery started post-COVID, it's a K-shaped economy. There are pockets of economy which are doing pretty well, but there are pockets of economy which are not doing well. And my view is that, as far as this economy, and this is not an India phenomenon, this is a global phenomenon. This is something very similar. It's how the economies are playing out in Europe, US, everywhere else in the world. So it's a global phenomenon. And I think this is how the economy probably, in this economic cycle, one conclusion, I was looking for a mean reversion, but I've come to a view that this is how economies will be over the next 2 to 3 years, whatever time we have in this business cycle. Markets are a reflection of that. Markets are extremely polarized. So on one end of markets, you have stocks which are trading at 70, 80, 100 times multiples. And on the other end of the market, values become even cheaper, or what we call in our analyst language, deep value. So values become a value trap, because every time you see a value and you try to get into those names, 1 or 2 quarters down, the stock is down another 20%. So I think this is how, and because money chases performance, so this is also leading to more money flowing towards those more expensive stocks, because eventually those stocks are delivering returns for you or outcomes for you. So markets are polarized. The index is somewhere in the middle.
No, so the polarization this time also being seen between the SMIDs and the index, right?
Absolutely. So that's one trend. The second trend, which is clearly playing out, is this is the first time I'm seeing, just to put in context, CY25, India's underperformance versus emerging markets is the sharpest we've had after 1995. Okay, India is not underperforming. India is a laggard market when it comes to global markets. If you see US markets in the last 3 weeks, they've made all of these markets are now trading at new 52-week highs, and we're still away from that. And it's the worst. Actually, it's the worst performing market.
Yeah. So here, sorry, please finish your point.
I want to go back and relate this. One of the biggest driver of the growth, and this has I think it has underpinnings in what's happening in the world. The biggest driver of the growth today is, all of us know, the elephant in the room is AI. Yeah? India had similar underperformance in 1995, and that's primarily because whenever you have a new foundational technology which will change the world, the first 3 to 4 years or 5 years, a significant amount of investment goes into building infrastructure for making that technology accessible. Internet happened in 93.
Okay.
Yeah. Some of the best performing stocks at that point of time, apart from the technology companies which were there, were the hardware companies. Cisco.
By the way, viewers, for context, Pankaj Murarka started his career as an IT analyst in 94. So just right there. Yeah, please make a point.
Cisco, IBM, HP, they were some of the darlings of the market.
Yeah.
And they were all because big beneficiaries of proliferation of internet and PC revolution, apart from whatever Microsoft and everything else. And something similar is playing out now. India did not have a plain hardware when the internet evolution of internet happened. We don't have a play on AI infrastructure, be it the semiconductors, be it the hyperscalers, or the foundational model companies.
And therefore, Pankaj, the question is, the point that you made about K-shaped economy for different economies, if you take the world as a single economy, could the K-shape last wherein 3 or 4 or 5 countries. And in fact, you spoke about the performance. We have graphics of that, of the performance of various economies or markets. South Korea, Taiwan, maybe US versus India. Could the K-shape last for a bit, wherein India, some of the other markets may not perform, but the others may continue to perform?
Answer is very simple to my mind. It's very difficult. It's not very difficult to time it. But once the technology is made accessible, this is like, you building, once new technology is available, it's like building roads and highways. Once you build roads and highways, only then cars and vehicles can fly on that. Once the technology is made accessible, the world has to access that technology. The diffusion of the technology has to happen by corporates and consumers. India definitely has a play there. India has a dominant role there. 70% of market share in IT services, these companies will play a very fundamental and very central role in diffusion of technology.
So the K will flip. The K will hopefully at some point.
There will be a mean reversion. But I am willing to,
Why you
I just want to ask her.
No, let him finish. I'm willing to what? Willing to bet?
I'm willing to bet there'll be a mean reversion.
When?
I think my best judgment in the next 6 to 12 months.
Wow, okay. Interesting.
My best judgment next 6 to 12 months.
So I have a couple of points.
Because also, just a last point, in the whole bill, it's always a very normal thing. It has happened cycle after cycle. When such a foundational technology happens, the world goes overboard and it ends up overbuilding or over-investing into infrastructure.
Yeah.
Exactly same thing happened during the internet era in 94 to 97. Yeah, and a lot of these hardware companies then crash.
I was going to ask.
Yeah. The same thing is happening now, where companies are making investments, hyperscalers are making investments. Those investments cannot be rationalized basis cash flows and ROIs. Today, those investments are made because no one wants to lose. So those investments do not have a rational ROI or cannot be justified basis ROI. So you already know that you are at things have gone overboard. And one of my classic, I follow, meaning one of the classic saying from amongst the 10 commandments of Bob Farrell, one of who's very senior Merrill guy, one of the ex-colleagues, that markets have this tendency that the more they go away from the mean, they tend to rebound very sharply. So those last 3 or 6 months can be very ferocious, but I think somewhere we are in the fag end as far as stock markets are concerned on the AI theme in terms of whatever you're referring to, Korea, Taiwan, and all of that.
Just on the point that you made, right? Those 3 companies that you mentioned, and specifically Cisco and IBM, right? For those people that don't know what happened after that and the years that followed, just very quickly, there was a significant amount of value destruction that took place as well. For people that piled on at that time and held for the longest time, particularly for Cisco, the story that people have told over the years is...
It's very normal in a business cycle for companies to make excess investments and companies to go bust. And some of those companies, the very fact that some of these companies survived means they still had some underlying business. A lot of companies went bust during that cycle. So I'm not even discussing that. Obviously, there are a lot of companies within US, beyond this, the top 5 or 7 names which we know, which have significant leverage on the balance sheet. And many of these companies will go bust. They'll not be around 18, 24 months out. Meaning, I think there's no, I think we should not even be discussing that. It's a foregone conclusion. And it's a very normal thing to happen in a business.
That's a very straight, candid take when it comes to AI. But then, okay, let's take into consideration as a retail investor, everyone is still thinking of what to do, correct? IT as a sector, if you have to look at Q4, the sector around 12% is the kind of profitability growth that the companies cumulatively have put together. And if you have to look at any of the other plays, which are your AI-driven plays, take into consideration your power sector, take into consideration cap goods, taking the data center play into consideration, power has still somewhere outperformed cap goods, not to that extent in terms of profitability. Would you be then saying that these are sectors which investors should then probably avoid right now, because you are seeing some kind of a wave that will come in over the next 12 to 18 months? Because that's what people are betting big on right now.
So I think power and utilities will continue to do well because we also need to understand the context that for a period of 15 years between 2008 and 2021, we did not have a single penny being invested into new power plants in India because in the 10 years prior to that, we built so much of capacities. 95% or 90% of the companies in India's power sector went bankrupt between 2010 and 2020, where we had this whole issue about big NPAs in banks and all of that. So we're coming out of a phase where now actually demand is running somewhat ahead of supply. It's a sector where you cannot bring supply in a short span of time. It's a sector which takes 3 to 5 years to bring supply on place. So it's a sector where demand supply is in balance. And as India's underlying growth, sustains across manufacturing, PLI, and so many other things, obviously rural electrification, all of that. So supply needs to keep pace with that. It's a sector where we had a lost decade for the sector. So we need to understand that the context from where we are coming from. So I think powers and utilities have done well, I understand, but I think they'll do well. They'll continue to do well because apart from AI-driven infrastructure, which is not a significant contributor to demand growth in India today, unlike US, but there are other drivers of growth, and we have a sector with demand-supply balance. As far as IT is concerned, it really depends on time horizon. If you ask me for any investor who has a time horizon of 3 to 5 years, I think, okay, let me put it this way. I think in the last 20 years, probably this is one of the most exciting opportunity or time at this point of time to be buying in these companies.
So you're not on the school of thought that Indian IT has missed the bus, they're not doing anything exciting, they're now trying to clamber on and has been left out of the whole race. You're not on that school of thought.
On their core business, they are doing what they're supposed to be doing and they're very much there. They have not missed the bus.
So every new Anthropic update is not bothering you?
Certainly not, because eventually diffusion of technology for adoption of technology, enterprises cannot do it on their own.
But Pankaj, Anthropic is saying that they are going to do what IT service companies are doing and their own LLMs.
I wish. Okay, I think they understand technology. They don't understand enterprise ecosystem, how enterprise operates. Enterprise are absolutely paranoid about their data. AI models are probabilistic model. The same question you ask the AI model 3 times in a day, it will give you a different answer. Yeah. Enterprise data systems of processes are definite and deterministic models. You need finite outcomes. Just think about, think about a large bank, let's say a Citibank, operating in 140 countries, each country different regulations. In each country, hundreds of products. Let's say home loan, retail loan, this loan, that loan, and all of that, right? It's a very complex system. Do you think a Citibank will open its system to Anthropic? I'll give you a classical example which Workday CEO gave. Okay, Anthropic launched an tool where you can run your own HRMS software, where enterprise can, and it's available for free. It's there on Anthropic's website. Anthropic has 3,000 employees and they're using Workday. First, they need to use their tool for their own employees.
What is the reason?
So the Workday CEO is at pains to explain that all the 3 companies, Google, OpenAI, and Anthropic, they run their entire employee management system, HRMS, on Workday. And each of them have launched a tool where you can build your own HRMS and you don't need Workday. But first, these companies need to use for their own self before you can expect others to adopt. But they are on Workday systems. So I think, there is actually the problem with markets is twofold. Markets are an excellent discounting machines and they're very fast at processing data. Where markets make an error of judgment is processing information. And the fear of unknown, because there is so much of information coming, the fear of unknown is a much bigger fear than the fear of known. When it's known, markets are very efficient at pricing that. So what markets create inefficiencies and which creates opportunities for long-term investors is when the markets are processing information.
Do you think we're coming at just taking that forward from the AI story to now the geopolitical story? Do you think that we are at the fag end of that opportunity where you can actually build serious wealth if you keep the faith, where your patience just has to outlast whatever happens in the Strait of Hormuz? Are we close enough over there? Because markets have started reacting in lesser and lesser intensity to all the news coming from the West Asia
Not
crisis.
really, Tamanna. Let me give you another top-down template. So there is a lot of this, everyone is so focused on what the fourth quarter earnings are, how everyone is busy forecasting first quarter numbers.
Yeah.
I've never seen so many people trying to trying to get the impact of oil prices in first quarter.
Yeah.
Including my cook, he's trying to. I'll give you. So it's. I think at times it makes sense, logical sense, to step back and zoom out. I'll give you a simple template for investing into India. India is a large economy. It's an economy with very stable macroeconomic fundamentals. Yeah, it's a very resilient economy. One of the simplest template for investing into Indian equities is buy them when India gets a macroeconomic shock. India does not get a macroeconomic shock very often. Yeah, whenever India, because it's an economy which is very large and resilient, it has the ability to absorb that shock. Markets have a tendency to overreact on both good news and bad news. So when the shock really hits the economy, markets tend to overreact. But eventually, even if India's growth gets impacted in the short term because of an external shock, eventually it reverts back to mean growth over a period of 4 to 6 quarters. Yeah, because it's an economy which is underlying economy is very resilient, and which is what creates a gap between what markets tend to price when the shock happens and the medium-term value of that market. Yeah. Last time we got a macroeconomic shock was in 2013, in midst of taper tantrum. Yeah, when Indian currency depreciated by 30% in a matter of 4 months, and all the three markets went for a toss. So we had a significant impact on currency. We had bond yields which had gone up, and equity market had fallen sharply. 12 months post that, post August 2013, the shock was experienced between May 13 and August 13 when the Fed first time expressed that they might want to withdraw from QE program. There was a taper tantrum and there was a runoff on all emerging market currency. India was running a very high inflation at that point of time, and as a consequence, between August 13 and August 14, markets fell sharply between March and August 13, but the next 1 year markets went up by 45%.
45%.
Yeah. India has got a macroeconomic, the sharp rise in oil price was a perfect macroeconomic shock for India.
But that's my question. Are we at the end of that opportunity?
We are at the end of that shock. So this is the beginning of the opportunity, not the end of the opportunity.
So then where is the opportunity is the question, right? Because as
buying
Pankaj
India, just to complete that point, buying, there's a very simple template. Whenever this economy faces a macroeconomic shock, you see what has happened in the last 8 weeks. Yeah, currency has adjusted by about 5%, but last 1 year has been about 9%, extreme. 3 standard deviation above normal. Yeah, bond yields have gone up by 40 basis points, but bond markets are very smart. 10-year bond yields bottomed out in May last year. Between May and December, RBI did 75 basis points of repo rate cut. Bond yields went up by 75 basis points. Bond markets had their own precise.
Sorry, I have to come in here because this is exactly what I was spotting, and I'm actually want to.
I knew what was running in your mind.
I want to actually zoom out because you're talking about India, Pankaj, but then I was looking at bond yields in the US, I was looking at bond yields in the UK and in Japan, right? So if I look at the 30-year, for example, in the US, it's hovering around 5%. In the UK, it's hit the highest level since 1998, the 30-year. The 30-year in Japan is less than 15 basis points away from all-time highs. The 10 years have also moved up substantially. The question that I'm asking is, why the dichotomy, right? You're talking about discounting the future.
Simple. There are 2 different trends playing out there. There is one very long-term trend playing out, where Western world obviously has significant amount of leverage, and those companies are running very large fiscal deficits in case of US, in case of Japan. Very loose monetary policy, still significantly behind the curve because they are focused on getting, after 40 years, Japan is out of deflation. So they really want to go very slow in terms of raising rates, and it's a directed policy. I think it's a policy action where they want to keep the currency weak and so on and so forth. And there is a cyclical trend. So in India, the bond yield, rise in the bond yield is more a cyclical trend than a longer term trend about the larger trend. So I think those are 2 different trends that are playing out, deciphering the market. So the point I was coming back to is the bond market yields have taken a toss, equity markets have gone for a toss, and currency markets, currency is adjusted. So you can feel the impact of macroeconomic shock that in the experience across all financial markets. Markets are very fast at processing. Yeah, but the simple template is when you just have to go and buy Indian equities when India faces a macroeconomic shock. The next 12 or 18 months leads to significantly higher returns. we are at a point where India has experienced a macroeconomic shock.
Let's try and figure this out.
The last point, you don't get these opportunities very often because India faces a macroeconomic shock once in a 10-15 years. It's a large economy.
If this table believes so, okay, let's do a quick check. Hiral, one sector that has stood out for you in this result season, maybe that's a sector. I will confirm with Pankaj. Very
utilities, 61% PAT growth.
Utilities. So you think utilities have delivered in this quarter?
Yes.
I think despite
quick, you don't get so much time to think. AMCs, asset management.
Only because of what is lined up,
Okay, Tamanna?
Diagnostics, what's happening? Pura India test कर रहा है.
Maybe. क्या हुआ? Hanta virus. What has come?
Something rhymes with Hanta virus. That is what the virus is. But no, this is just only with rats and very slow transmission. And we did that story today so that people is diffused. But something's happening with diagnostics and I think pharmaceuticals, I would add.
Pharmaceuticals, okay. And I thought that just the price hikes and Ambuja's commentary that they are going to focus on profitability, the cement. So maybe there are 4 sectors from 4 editors out here. Pankaj, what did you think?
I think industrials, because there are pockets of economy which are, while the aggregate investments or capex in the economy is still moderate, there are pockets of economy where the capex intensity is reasonably very high and it's very robust. So if you have companies focused on that, and especially relates back to what Hiral was saying, power, utility, data centers are big drivers of this thing, and the demand outlook, the order book momentum is extremely strong.
That is strong, but one quick question, and I think we started India Market Open with that, is whether there is now value in large caps versus the SMIDs, because the SMIDs are running up. Valuations in SMIDs is very expensive and your large caps are way cheaper. What do you do?
So I'll tell you what Pankaj had told 6 months ago. Okay, large caps may be the Nifty, but the profit growth is in the mid cap and the small cap space.
But now what happens? Does that reverse? Is this a tipping point now from here?
Look at Q4 results. SMIDs have outperformed large caps, I think, on most parameters, whether it's IT, whether it's financials, across the board.
Your small cap profit growth is 30%, mid cap is 29%, and large cap is 14%. And 73% of your mid cap companies have outperformed estimates. I think he'll just have to add. I don't even want to ask him.
No, I think that's true. I think that point remains valid, that we are coming out of a cyclical slowdown in the economy.
Because we have 45 seconds on the show.
Sure. I think that trend probably will continue for the next 2 or 3 quarters.
So you are not worried if now we're going into the weekend, again, some statements, some comments, state of hormones, more than a love tap. I learned a new word today, love tap. Do you know what is a love tap?
No,
so that is how Trump has described the exchange of firing between the US and Iran in the Strait of Hormuz.
The most recent one.
He's saying, the one yesterday, he's saying it's not the end of a ceasefire, it's just a love tap. Apparently that's a move in a war where, you sort of...
Non-escalatory.
It's
non-escalatory. It's just like a subtle nudge. Yeah, pyar se mara.
Everyone's looking at Neeraj like,
because I'm looking at everybody here. Pankaj, 10 seconds. So answer that. Before we
I'm not worried about it. I think the worst of Hormuz is behind us. So I'm not worried about that.
Okay. It's a love tap with markets as well.
All right, on that note, we really have to wrap up. But thank you so much for all of you joining in, and tell us what you think of this show and what you want to hear next. We'll be back next Friday, same place, same time. You're a filmmaker, you're a psychologist. Why are you in the restaurant business? Why is that business about dosa?
Always missed the taste of that benne dosa that I ate back home in Bangalore at my favorite Darshini's.
Akhil and I had this routine. We'd land in Bangalore and straight away before going home, we'd stop, get a dosa and then go home.
I'm trying to understand how you go from a craving, and I like this particular dish, to, hey, let's give up our full-time jobs and start a dosa business.
I wanted to be a filmmaker, I wanted to be an actor, I wanted to be an IAS officer growing up. I never had a dream of opening a restaurant. Two people who don't know anything about F&B, never opened a restaurant, not trained anything in the culinary field, decide to open a small dosa cafe and people are waiting to eat your food. It is unimaginable.
How do you get a branding like Penne? How do you get Deepika Padukone to show up to your place in the first week?
I don't know Deepika. I got a call and I answered the phone. I thought it was a work call. Nikhil said that Deepika wants to come to Penne and I said, Deepika is your sister? He said, no, Deepika Padukone.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New Year.
Markets end lower today, but for the week, Indian markets end on a green note for the second consecutive week. Rupee ends lower compared to the previous close, but stays way off its recent record low, closes the week at 94 rupees 50 paise against the US dollar. Oil prices are sliding for the week as diplomacy still holds the upper hand, and Brent hovering between $98 to $101 per barrel. Despite fresh US-Iran clashes near the Strait of Hormuz, Trump insists the ceasefire remains intact. SBI shares fall almost 7% today, sharpest intraday fall since budget day after a weak set of Q4 numbers by the largest bank of India. NII posts of 3.8% growth, but the number remains below the estimates. Delivery and quick commerce platform Swiggy posts 800 crore rupees of net loss in their fourth quarter, double of market expectations. Revenues up 44%, pumped up by food delivery business. Exclusive update sources tell NDTV Profit that cloud hangs over Dixon Vivo JV approval amid the ED probe under PMLA. MHA to take final call on Dixon Vivo JV proposal soon. In a big setback to Trump, US court rules against Trump's latest 10% global tariffs imposed on all trade partners, calling it unlawful. Court blocks enforcement, lending India a negotiating edge. Amid looming health scare related to another virus spread, the World Health Organization says that 5 cases of hantavirus have now been confirmed in relation to an outbreak on a cruise ship. Many more may follow due to the virus's 6-week incubation period. Twist in Tamil Nadu politics, buzz over anti-Vijay front peaks. DMK sources say the party will make a move after May 10th if Vijay fails to get the numbers. Meanwhile, Vijay seeks appointment with governor this evening. Home Minister Amit Shah chairs marathon meeting in Kolkata, BJP's legislature party, to formally elect its leader, with Suvendu Adhikari emerging as the front-runner. Sources say Bengal may get 2 deputy chief ministers. BCCI sets new SOP for IPL players, bans unauthorized entry in players' rooms, warns of honey trap security risk. Hello and welcome. This Friday afternoon, you have tuned into Profit 360. I'm Nisha Podar. Let's take you through all the top developments of the day so far. While the benchmarks really wrap the trading in the red, with Nifty really ending below 24,100 today, on a weekly basis, Nifty ended on a green note. Remember, rising over 0.7% for the week. And this, remember, is the second consecutive week of green ending for the Nifty during the war period. These are the 2 weeks. Now, the broader market, remember, did relatively better on both weekly basis as well as today. Shares of SBI, they clearly dragged down the Nifty as their quarterly results really disappointed the Lal Street. Let's get my colleague Jasmeet joining in with all the market action of the week and the day. Jasmeet.
Well, a bearish day for markets today. Nifty 50 ends in red, down about 0.6%. Now, in terms of the overall mark, we do see Nifty 50 holding up above the 24,100 mark, but below the 24,200 mark. In terms of top losers, we have something like an SBI, which lost the most in the second half of the day, down about 6%. Then you also have Coal down about 2%. Now, well, if you look at the weekly image, it turns out to be positive. While Nifty 50 ends in green over the week, gains about 0.7%. And this is second consecutive week for Nifty 50 to gain the most over the last 2 weeks. Now, in terms of the top gainers, we have Shriram Finance and M&M gaining the most in overall market. In terms of the broader market, it has outperformed the benchmark, while Nifty to small cap 250 and mid cap 150 both end in green. Now, in terms of mid cap 150 is up about 3% and top gainers in Nifty mid cap 150 are stocks like Godrej Industry and Thermax gaining the most over the week. Now, in terms of small cap 250, which is up about 4% and the top gainers in small cap 250 are stocks like Valor Estates and First Source gaining about most in the week in terms of overall small cap 250. Now, if you look at the broader market, we do see that Nifty Auto was a top performing sector for the week, which has gained about 5% and in terms of top gainer in Nifty Auto, we have stocks like Samvardhana Motherson and M&M gaining the most. Now, in terms of Nifty Defense, Nifty Realty, Nifty Pharma, even they gained a lot during the week. They gained over 3%. In terms of top loser, we have Nifty PSU Bank, which lost the most, which is down about 1.3%. If you look at the key streaks, Nifty IT gained for the second consecutive week, while Nifty FMCG and Nifty Pharma gains for the 5th consecutive week. While lastly, Nifty Bank snaps its 2 weeks of losing streak and gains during the week.
All right, Jasmeet, thank you so much for getting us all those details on the market action for the week. Now, oil temperature, that continues to cool down as hopes of a peace talk are on the cards between US and Iran. Now, the crude price currently ranges between $95 to $100 a barrel, while Brent trades around $100 per barrel. Now, the US WTI benchmark also holds tight to about $95 mark. If you look at the money market in India, well, the rupee, which has been impacted by the crude movement and the global uncertainty, the rupee really weakened during the week, but today it has weakened but much above the lowest level that it had touched during the week, ending the week on 94 rupees 48 paise against the dollar. All right, let's take it straight to the earnings. It was a big day of earnings and still continues to be through the evening. Well, India's largest bank, State Bank of India's shares witnessed their sharpest intraday fall since the budget day, after the country's largest lender really reported a weak set of Q4 numbers. Now, while SBI managed to beat the profit estimates, weaker core operating matrices, they appeared to really disappoint the street. Standalone net profit for the March quarter came in at 19,684 crore rupees, which is up nearly 5.6% annually and ahead of analyst estimates of 18,897 crores. To decode these numbers further, let me take it across to my colleague Piyush, who is joining us with all the details, internals and the analysis. Tell us, Piyush.
That's right. SBI has come out with a stable set of Q4 numbers, although there are a bit of one-offs as well in this quarter. Firstly, the bank's net profit has grown to around 19,600 odd crore. It has grown YOY, but Q on Q there's a dip essentially because of lower gains in the other income. The bank actually faced around 4,500 crore of trading income loss from forex, bond market and equity instrument investment that the bank had made. So this made a little bit of a dip in the net profit. The other helpful thing was that the provisions actually came down both YOY and Q on Q, which helped pull up the net profit up. In terms of asset quality, the bank's slippage ratio and gross and net non-performing asset ratio is broadly similar. There were slight higher slippages in Q4 emanating from agriculture loan portfolio, which the chairman of the bank, Mr. C.S. Sethi, explained in the recent press conference. Going ahead, the bank is actually targeting 13 to 15% of loan growth in FY27 and around 11 to 12% of deposit growth in the next fiscal. The bank says that it has around 5.5 lakh crore of corporate loans that are in the pipeline emanating from segments such as infrastructure, traditional energy, petroleum and other allied sectors. Overall, the management's guidance is that the NIM actually will be at around 3% level, which is very keenly eyed. The NIM did take a Q on Q dip essentially because the bank's share of EBLR loans rose and MCLR linked loans actually came down. The rate had come down a little bit. So for FY27, the bank remains cautiously optimistic. Back to you.
All right. Thank you so much, Piyush, for joining us with all those details. Let's also hear out the top management of the bank on what really transpired and why this kind of a stock reaction. In fact, management has said that the repo rate cut in mid-December led to a repricing of the MCLR-linked loans hitting the NIM. Listen in.
There are a couple of rate cuts which have happened in December, middle of December, have not been fully taken in the EBLR book. So that is 25 basis point cut in December, and also we had 5 basis point MCLR cut. That's one main reason where EBLR book got repriced. The second thing is there's been a substantial growth in the EBLR book itself. If you have seen both home loans and MSME, which are essentially linked to the EBLR, that also has contributed to the NII reduction. While we have been very successfully containing the cost of resources, in fact, the cost of resources has come down over the last quarter. And the NIM guidance, what we have given, exit NIM of 3%, I think we were able to fulfill that. And we have given this guidance that the NIM will be, exit NIM will be 3%, and that has been achieved.
Right, to another big development when it comes to corporate earnings announced today. Food delivery and quick commerce platform Swiggy posts 800 crore rupees of net loss in the fourth quarter, double of, remember, what the market was really estimating. Revenues were up about 44-45% and operational loss narrowed compared to last year Q4. Now, the sharper than expected net loss was largely due to the higher finance costs and also elevated depreciation expenses as the company continues to aggressively invest in expansion and infrastructure. To decode the numbers, we have Mahima joining in to give us all the details. Mahima, it was quite a shocker and the market reaction will be watched out for.
All right, so overall, Q4 for Swiggy not looking very positive because the net loss number has come in at that 800 crore versus an estimate of 400 crore. So 440 odd crores. So the street probably might not like this number. Revenue largely in line with what the street was expecting, slightly higher, 6,383 crore versus that of an estimate of 6,262 crore. EBITDA loss has narrowed down, however, at that 697 crore versus that of 962 crore, but bottom line still a concerning factor for something like a Swiggy. In terms of the segmental growth, food delivery growth stood at 27%, so not a bad quarter when it comes to the food delivery business as a whole. Quick commerce, however, the growth has kind of de-accelerated and not a very positive one because that's come in at 53%. Out-of-home consumption has seen a growth of 60%, supply chain a growth of 56%. Overall, in terms of gross order value, food delivery has seen a growth of around 23%, and quick commerce gross order value growth stands at 69%. Monthly transacting user overall on the app has gone up by 27%. So this is the overall view with regards to where Q4 stands for Swiggy, but I think the net loss and the quick commerce growth de-accelerating are the two concerning factors here.
All right, post-market hour results, and Monday morning, Swiggy will be the stock to watch. But today, a lot happened when it comes to Lupin stock as well, despite reporting a strong set of fourth quarter performance. And that's the slide that it saw in the trading hour today, despite a surging revenue as well as good set of numbers when it comes to the margin picture as well. However, with geopolitical tensions, it will be impacting the margins, is what the management shared with NDTV Profit. Listen in to Ramesh Swaminathan, who's the Executive Director and Global CFO of Lupin.
So clearly, we are concerned about the situation as it is emerging. It certainly has an impact when it comes to to profitability. It is obviously the various factors that I spoke about, which is essentially input costs as well as in fact the logistics cost is certainly going to weigh in. There's sometimes the availability of containers to kind of ship in. Essentially that's going to be a problem. So overall, we are still reasonably confident of a pretty good margin, though of course not necessarily the same levels as you saw in Q4, but pretty healthy, all the same.
All right, so that was Lupin giving a softer margin guidance for this particular quarter, that is Q1 of FY27. Biocon reported a better than expected fourth quarter performance, aided by healthy growth in the biosimilars business. Now, the quarter, however, came with a high base due to generic sales in the year ago period, while an exceptional item really weighed on the company's reported net profit. Speaking to NDTV Profit, Biocon CEO and Managing Director Shrihas Tambe highlighted the company's growing focus on the GLP-1 segment, a space globally seen as a major opportunity amid the rising demand for diabetes and obesity therapies. Listen in.
We've got several products that we are launching in the coming fiscal, in the current fiscal now. So we are looking to see that these ramp up in a steady way, because this business is something that delivers enduring margins. In terms of the GLP-1 portfolio, again, a very synergistic portfolio to our insulins pipeline. We have a leadership position there, as you know, and we believe that this will complement it, developing our diabetes profile in a portfolio which is very differentiated from us.
All right, away from the pharma, results from the consumption space, Titan reported a 35% year-on-year rise in the consolidated net profit for the January to March quarter at 1,179 crore rupees as compared to 871 crore rupees in the corresponding period in the last year. Now, the company also saw a sharp surge in the revenues from operations, with top line nearly doubling to 26,920 crore rupees versus about 14,900 odd crore rupees on a year-on-year basis. Now, driven, this was by strong demand for gold jewelry, remember, as well as coins. However, elevated costs weighed on the profitability during the quarter despite the robust revenue growth. And Titan, which owns, remember, the jewelry brand Tanishq and Carat Lane, has also announced a final dividend of 15 rupees per share. Now let's take it straight across to an NDTV Profit exclusive. A cloud continues to hang over the proposed Dixon Technologies and Vivo joint venture, with the government yet to grant its approval for this particular transaction. Sources tell NDTV Profit that the proposal remains under review, even as Vivo continues to face scrutiny from the Enforcement Directorate under the PMLA probe. Let's take it across to my colleague Rishabh, who has all the details coming in on this developing story. Rishabh, what are your sources telling you on this?
Absolutely. What we're picking up from top government sources is the fact that there is some sort of an overhang over this proposed joint venture between Vivo and Dixon. This has been in the works since December 2024. Both of them entered a binding agreement for a joint venture roughly a year and a half back, and it has still not received a nod from the government. What we're picking up from the government is the fact that though there is no final call that has been taken, the proposal is with the Home Ministry right now, and they are expected to take a call on this very soon. What we're also picking up is, of course, the fact that there is the ED probe that is being undertaken on Vivo right now on allegation of money laundering charges, and these are, of course, big acquisitions. You have allegations made of roughly 62,000 crore worth of funds being illegally transferred to China to avoid taxation. So that's what is being probed at Vivo, and that's why this sort of an approval coming in from the government is taking so long. What we're picking up is that the Dixon is still quite hopeful of this proposal going through, and what we're picking up is that there's still some time that we'll see, and the Home Ministry is likely to take the final call on this particular issue.
All right, Rishabh, very important development there, but hold on. You have another important story that is on India's export-focused MSMEs. They could see a fresh credit boost under the proposed ECLGS 5.0 scheme. But there's a catch. Exporters are hoping for more competitive borrowing costs while the government expects more defaults. An industry body, FIO, says that wider participation may depend on interest rates staying in the 7.5% to 8% range. But the current proposal pegs rates at around 9% for the banks and as high as 13% for the NBFCs. In fact, Rishabh joins in with all the details. Rishabh, this is a great analysis. Give us the internals.
Absolutely. So what we're picking up is that the ECLGS 5.0, very recently approved by the cabinet, what we're seeing is that exporters are pegging the sort of credit uptake that might come as a result of this scheme at moderate to strong. So it's not an overwhelmingly positive sort of an outlook that these exporters have. What the overhang here is, of course, the sort of interest rate that the government and the banks are able to provide at this point in time. What exporters I spoke to, they said that it has to be over 1% lower than the current borrowing rate that they have. So that's the only scenario in which it becomes competitive. What we had from Ashwini Vaishnav was that it's at about 9% right now for banks. But what exporters prefer is in the range of 7.5% to 8%, because that is what is a percentage lower than what they are currently paying. So that's what exporters are telling us. What we're also seeing is that the government is accounting for slightly higher NPAs this time. What happened across ECLGS 1 to 4 is the fact that about 40,000 crores were put in. Roughly 3 to 4% of NPAs were seen as a result of the schemes, as a result of the loans that were lended out. But what we're seeing now is that roughly 6 to 7% is being accounted for at the 18,000 crores that the government has put against a credit flow of roughly 2.5 lakh crore rupees. So that's what we're picking up when it comes to the ECLGS 5.0.
All right, Rishabh, thank you so much for getting us all those important details. Moving on to another important story, Google. Google is exploring investment opportunities across AI infrastructure, including the production of servers and drones, Union Minister Ashwini Vaishnav said today. Now, this announcement follows Google's groundbreaking of its $15 billion AI hub in Visakhapatnam, Andhra Pradesh in April this year. All right, in a major setback to Donald Trump, a U.S. court has ruled against his proposed 10% global tariffs, saying that the across-the-board duties were not justified under a 1970s trade law. In fact, the ruling also came in response to a plea that was filed by the small businesses, which argued that the tariffs would raise costs and also hurt their competitiveness. Now, the decision marks another legal hurdle for Trump's tariff strategy ahead of the U.S. presidential election campaign, although the administration is expected to appeal and has legal options there. All right, so that was an important global development, but there is a health scare that is looming globally. A deadly Hanta virus outbreak aboard a luxury cruise ship in the Atlantic has now triggered international concerns, with 2 Indian crew members amongst those still on board. Now, World Health Organization has confirmed 5 cases on the Dutch expedition vessel, with at least 3 deaths really confirmed so far because of this deadly virus. Now, the ship carrying nearly 150 passengers and crew from 28 countries is currently headed towards Spain's Canary Island, where further medical checks as well as containment measures are expected. The WHO says that the virus does not currently pose a broader pandemic threat. Listen in.
So far, 8 cases have been reported, including 3 deaths. 5 of the 8 cases have been confirmed as hantavirus, and the other 3 are suspected. Given the incubation period of the Andes virus, which can be up to 6 weeks, it's possible that more cases may be reported. While this is a serious incident, WHO assesses the public health risk as low.
All right, WHO warns of any panic because of Hanta virus. Please remember that and take care of yourself. With that, it's a wrap on Profit 360, but do keep it with NDTV Profit. Thank you so much.
You're a filmmaker, you're a psychologist. Why are you in the restaurant business? Why is that business about dosa?
Always missed the taste of that benne dosa that I ate back home in Bangalore at my favorite Darshini's.
Akhil and I had this routine. We'd land in Bangalore and straight away before going home, we'd stop, get a dosa and then go home.
I'm trying to understand how you go from a craving, and I like this particular dish, to, hey, let's give up our full-time jobs and start a dosa business.
I wanted to be a filmmaker, I wanted to be an actor, I wanted to be an IAS officer growing up. I never had a dream of opening a restaurant. 2 people who don't know anything about F&B, never opened a restaurant, not trained anything in the culinary field, decide to open a small dosa cafe and people are waiting to eat your food. It is unimaginable.
How do you get a branding like Penny?
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
Hello and welcome to all of you, and now is the time for KYC. This is the hottest show where I get you one of the best companies where you can analyze and is there any alpha or not. We try to decode that, but before decoding that, there are some hints. Give it a guess. The first hint, it's a Navi Mumbai based diagnostic company. Of course, the headquarters is in Navi Mumbai, especially the Turbe area. The second hint I would like to give you is recently the company came out with its numbers also, and I know a lot of diagnostic stocks are buzzing in trade. So nevertheless, strong Q4 numbers also coming in. Let me give you one more hint, try to guess it. From March lows, the stock is up 35%, and interestingly, there is an interesting angle to it. The FIs, DIs, they have increased their stake in the last 2 years as well. A lot of restructuring has also happened in the company. And I'd like to give you one more hint. Try to guess it. They recently appointed Madhuri Dixit as the brand ambassador. Try to guess, and I'm going to give you the company's name. There are a handful of diagnostic companies. It must be getting easier for you to guess it. But if not, don't worry, I'm here. The company in focus is Thyrocare Technologies. They're pretty much interesting. There is a little bit of, you could say, there's a brand change also there, and the company itself looks a bit different from last time when we had a chat with the management. But there are a lot of questions to be asked. The first and foremost, earnings कैसा था? वो आगे क्या बढ़िया रहेगा? That's the big question to be asked, and that is why I'm going to ask the management the outlook for FY27 and the farm easy integration. What are the processes and the timelines everybody is looking at? And overall, we'll be asking the growth targets for the franchisee business, how they are moving forward, and importantly, the growth numbers for it. International expansion, एक ही lab है इनके पास टांजानिया में, but ये क्या नया market खुलेगा? That's the big question to be asked. आगे बढ़ते हैं. Let's see what else is there. It's of course genomic, specialty diagnostics, and the key launch pipeline ahead. They are moving into newer businesses also, because at times we talk that the pathology and the lab business is definitely there, but there's a question at times investors ask, is it commoditized? So we'll try to see the specialty angle to it. Of course, the preventive and the lifestyle package, what's the momentum looking like? What are the products coming in? What are the new areas of this happening? And to decode everything, we'll have Rahul Guha. He's the MD and CEO of Thyrocare Technologies, where he'll answer our queries and also give us some hints on why the diagnostic stocks are back in business after almost 2 to 3 years of pain. But company समझते हैं क्या है? We know that it's a diagnostic company, but इसके अंदर क्या है? Is it just a diagnostic company? No, there is something more to it. Let's go and understand that. This is of course a Navi Mumbai based diagnostic company and has 40 labs in India and 1 lab in Tanzania. It's pretty much interesting to talk about. But किस तरह धंधा करती है कंपनी? एक होता है फ्रेंचाइजी देने का, दूसरा होता है आपका पार्टनरशिप्स के साथ. Of course, these are asset-light models which I'm talking about, and the D2C models, even though the revenue subscription or the revenue contribution, is on the lower side. Let's also talk about the other key factors to look at the services. There are other services. This includes ECG, genomic testing, insurance-related products. आपके घर में आके भी जो है checking हो सकती है. Of course, you must have understood about the diagnostic that you have to go, but there are some services which can be done at home also. Quarterly attractive franchisee, that's the count coming in at 10,800, and the processed is almost 6 crore, 59 million to be precise, for the screening and investigations. That's pretty much interesting. And recently they changed an object clause also in the company. That means more ancillary businesses, data related businesses in diagnostics. That's where the things look. But Q4 numbers kaisa raha, and that is why most of the companies have done well. Strong performance coming in both financially and operationally as well. And of course, they are welcoming commentary coming on the lab expansion and the new offerings. Street wants to know a little bit more about this. This is what we'll be asking the management, because they have done well when it comes to the numbers. The gross margins, that improved by almost 113 basis points year on year. So definitely the margin outlook trajectory is something to watch out for. And the revenue segment, how it actually works. The franchisee is still at a higher side of almost 61%. And if you get that, for 34%, that comes in for the partnership segment. Very limited, almost 5% is for the D2C segment. So this is the entire revenue contribution for you. And how the growth has happened in the fourth quarter, that's also pretty much important to understand. And franchisee partnership, this is very small. So look at these two when you're analyzing, they have done really well. Both of these segments, 20% plus growth. But why are diagnostic stocks, all of them rallying in trade? There are some reasons for it. There's strong Q4 numbers. ये कंपनी लीजिए, मेट्रोपोलिस लीजिए, विजय डायग्नोस्टिक्स, सब ने अच्छे नंबर्स लाए हैं. प्राइसिंग प्रेशर जो था बाजार में after 2 to 3 years, that is bottoming out, and that trend we have already caught and explained to you earlier in the months at NDTV Profit. The price hikes is likely to happen in FY27 for diagnostic stocks, and importantly, the benefits of consolidation. So you get the larger players getting more market share, and that's what we are seeing that's happening. Street is bullish on for the foray into the high margin business, and that is where we are looking at diagnostics as some kind of a value creation as well. But to put things in perspective, let's understand how we judge a company in KYC. There are a lot of ratings which we follow, and largely I have tweaked a little bit of ratings. यहाँ पे operational parameters मैंने ले लिया है. If you are a regular at KYC, this is a return ratio parameter. Of course, these three numbers we never change because this is the holy grail of financials. Apart from that, let's look at the street cred, the shareholding pattern, how things have moved, and of course, I'm comparing them 4 to 5 major players in the diagnostic space, where to understand, is there any valuation here? And of course, the outlook, what the management expects going ahead. Of course, we'll try to get some quantification number also from the management when we start talking with them. The first one, income statement. Let's get in that parameter to understand what's happening here. Largely, it's a decent up move. Bottom line numbers, it's a 37% CAGR coming in the last 3 years. EBITDA also almost touching that 30% mark. So operationally, some benefits are definitely coming in when it comes to this company. Also, the Q4 numbers have been really strong, and that's what the street is awarding the stock. And look at the growth which has happened, like a turnaround हुआ है year on year basis पे आंकड़े देखिए 123% year on year basis पे जो है growth देखने मिली है. तो nevertheless the key numbers to track, EBITDA, net profit, they have done well. Let's look at the margins also, because that itself has done well, and the margin trajectory was earlier between 23 to 28, but now it's hitting that 30% mark, 32%, and now it's at 34%. That means there is a good strength coming when it comes to the margins. Abhi kitna upar jayega? That's what we'll try to understand with the management. Net income statement is a strong thumbs up as of now. Balance sheet, let's have a look at that. And it seems very nice. There is no borrowings, it's zero borrowings pe hai, and now it's well capitalized also. If you look at the cash balances, 68 odd crore rupees. And of course, there's a good backing and fund infusion coming in the company. Because of that, the balance sheet remains rock solid now. Aage jaake acquisition karenge, expansion karenge, that's what we'll be looking out for. So income statement has been good, balance sheet has been good. Let's have a look at cash flow. Where does it stand? And overall, that has also improved. Earlier, this was a net operating cash flows which was coming in. This was 168 crores, but overall it was on the negative side. That has turned in, and see, overall, the momentum has been really strong. If you just compare the last 2 years, of course, the 9-month FY26 numbers, it's also to look at, but net, this seems really strong as well. So that is where the growth momentum is coming in. So तीनों ही financial statement के आंकड़े में, income statement, balance sheet, cash flow, all the things the company has passed with flying colors. But let's go into more details. Let's try to understand the operational parameters this time I have taken, and this is the FY26 number I'm talking about. And when you judge a company in the diagnostic space, you need to have these important metrics, and this is something which I'd like to put it out. There's a revenue per patient, tests performed on the patients, total patients, and the active franchises जो इनके operational धंधे में काम आती है. और look at that, most of them have done well, at least these three. Revenue per patient, of course there was a competition in the industry, pricing को लेके, discount को लेके, so that's why this number is not very high, but other things are doing really well, and these are the particulars to look out. So that is a strong thumbs up coming in. But shareholding, let's see what's happening here. Promoters, of course, diluted the stake last year, and now it's coming in at 61%. But on the other hand, one good positive thing about the stock, the FIs and the DIs, is the increase in their participation. March 24, it was just 3%, and DIs, it was just 15%. But look at the story, how it's changing. Now that has almost doubled to 5%, and a DI has also increased the stake by almost 6%. So FIs, DIs are lapping up. Public is decent enough, and that shows the faith in the company or the institutions. But net to nullify the promoter stake sale, I will be giving this a shareholding. But apart from the shareholding part, let's talk about how things are moving when it comes to the street trade. Kitna paisa bana? That's the big question we always ask. And from March lows, definitely all the diagnostic stocks have done well. So has the company. The stock is up 35%. From 2025 highs, it's still down 11%. And if you are holding the stock for 1 year, congratulations, you have made almost 50% plus returns. But there is a bad news. The bad news is for the last 5 years, if you are holding the stock, just 33% returns have been made. So a really long-term investor technically hasn't made that much money as a short-term investor has made in this company. So to balance things out, I would be giving this a neutral rating when it comes to the street cred. But let's talk about the valuations and see, is there any kind of a valuation comfort with its peers? Well, technically it sounds quite similar. Metropolis is cheaper, Dr. Lal is on the expensive side. These are the 12-month forward P ratios I'm talking about, and 36 times is what Thyrocare is currently trading at. Let's have a look at the other stocks also.
which are there as a peer, and that's where we get them in. Suraksha Diagnostics and Vijaya Diagnostics. That itself is in line with most of the peers. Only outlier, it seems, is the 57 times P. Why is market giving that to Vijaya Diagnostic? That's the question to be asked. But as of now, it's quite neutral from its historic averages. A little bit correction is there, but it's evenly placed. Neither too expensive, neither too cheap. When I talk about the valuations for Thyrocare, maybe wait it out because the stock has run up as well, and maybe if you see some good earnings coming in the coming quarters, the valuations might turn attractive. So net, it's a neutral rating when it comes to the peer comparison, but the last rating is the most important. That's the outlook segment. Let's get in the first reason, the pathology strategy. That remains to be a key B2B service provider, and when you're a B2B service provider, your margins largely always remain compressed. Also, let's talk about expanding partnerships across insurance and ECG. Okay, these are high margin businesses, but this will take time. They have a higher gestation period, and remember, there's a lot of competition in the markets. The franchisee is going deeper into India with its focused test menu, and I'm talking about tier 2, tier 3 expansions also. And it's evenly placed. When I saw the map where most of the labs are located, they are strengthening this network and they are focusing on the larger players. So that's the eventual step to come in. But how much will the valuation premium market give to the diagnostic players? That's the big question to be asked. And they are strengthening their presence in Tanzania. Lab to sirf ek hai, but let's see what options come up or potential comes up in Africa. So net, it's a strong outlook, and I've given this a thumbs up as well. So let's give you an entire revision of the ratings in the show, and largely the company has done well in most of the parameters, be it financial or operational. That is why I've given 4 thumbs up. All 3 numbers they have done well, and operationally also the FY26 numbers has been good. Shareholding, it's kind of nullifying with the promoter selling stake, and FIs and DIs increasing the stake. Street trade and valuations will keep it neutral, but outlook remains strong. So let's add up the total rating parameters, and it's roughly coming 6.5 out of 8. So it's largely positive than the average numbers which we generally give to a company in our KYC show. So that's the entire rating coming in, and Rahul Gua, he's the MD and CEO of Thyrocare Tech. He will be speaking with us, and there are some interesting snippets about him. He has been reappointed as the CMD for the next 5 years as well, and that was just announced. And he's also the MD at API Holdings. So बहुत सारे brands हैं जैसे कि Pharmacy, Ritalio, Docon or Acnamed is something which he's a part of. 17 years of experience in Boston consulting, and of course education coming in from IIM Bangalore. Joined in by Rahul Gua, he's the MD and CEO of Thyrocare Technologies. Hi Rahul, it's always a pleasure to have you, and congratulations for being reappointed as the CMD for the next 5 years as well. But Rahul, I just want to understand first and foremost, we are here for the earnings. Very strong Q4 numbers have come in. I just wanted to understand the outlook, and if you can quantify any numbers you're targeting for the next 2 to 3 years.
Sure. Thank you first, and thank you for the compliments on I was watching the KYC show as well, so thank you so much for the assessment. Look, our strategy has been working very well for us. Last 2 years consistently, we've been growing at 20% plus, well ahead of the industry, and